Good morning, everybody. Welcome back to another episode of the Market Open. It is Monday, March 10th. I'm on the wrong microphone. 1 second. Okay, better. That's the right microphone. Good morning, everybody. Thank you for being here. We are starting off the second trading week of March officially, and we are going to get into a lot of different topics today, primarily why the markets continue to take a hit, which they are taking a hit in the pre-markets. We talked about it last night on the Sunday Futures show in terms of some of the volatility that we were dealing with. If you were on that show last night, or if you kind of took a look at futures, the pre-market action, SoFi down 3%, Robinhood down 7%, Palantir down 3%, NVIDIA down 2.5%. Probably not that surprising, given you already knew that the futures were setting up for a pretty crappy pre-market. And that's where we're getting right now. We have some pockets of green. We actually have some acquisitions that happened today that are relatively interesting. And so we'll talk about some of those acquisitions. You have the companies that got included into the S&P 500, DoorDash, Expand Energy, TKO Group, which owns WWE and UFC, and Williams-Sonoma, that all got in instead of Robinhood. They are up about 3% in the pre-markets. We'll see if those pumps can last as we get into the market open. But the broader indices, the S&P 500, the NASDAQ, Apple, Mag 7, semiconductor companies, kind of the core growth stocks, Palantir, Robinhood, all of them are down in the pre-markets, which is not a surprise given that's what's been happening for the past couple of weeks, basically, really past couple of months, and it continues to happen currently right now. So we're going to talk about a lot of different things and kind of get into why this is playing out. The 10-year is down right now, which I like to see. On Friday, the 10-year was up, and we really cannot afford to have a 10-year going higher while stocks are going lower, because that is the opposite effect of what Trump and the White House is trying to get done. But we'll talk about all the different headlines over the weekend. We had a bunch of different headlines this morning, actually. A lot of different stuff happening. Palantir actually had another partnership. I found out like 10 minutes before going live. This is the fifth partnership they're announcing, or fifth deal, I guess they're announcing, back to back. So it's nice to see that. They're partnering with Voyager Tech. They've already been working with them for a while. Today, they're expanding their partnership in regards to their space domain awareness solutions. So we're going to talk about that and go deeper into it. Palantir also did get included into the S&P 100, which is like a big deal, but also not that big of a deal. S&P 500 was the main thing. Now they're just kind of like in a higher tier in the overall S&P index. So it's good. I don't think it's really going to pump the stock. I don't think it's going to get other indices or money managers or hedge funds to like buy more of the stock. The S&P 500 was kind of that main catalyst 7 months ago, but it's overall a good thing. And we'll be discussing the implications of everything else that is happening in regards to Palantir as well. All right. Good morning. Thank you, everybody, for being here. Let's get into it. Gene Martin, what's up? Thank you for the nice scarf comments. You know, my dad got sick over the weekend. Not fever sick, but he got sick. Then my mom actually did get a fever. Then my sister started feeling something in her throat. And now I was really trying to avoid it, especially because I'm traveling tomorrow. So I cannot get sick. And so I was just avoiding them all weekend. I woke up this morning and maybe you can hear it a little bit in my voice. I feel a little something. I don't think it's anything crazy. I don't think I'm going to get sick. I just got sick 3 weeks ago, so I cannot afford to get sick again. But yeah, dude, like that's why I'm wearing the scarf. I'm like extra cold today. So I'm just, I don't know. Hopefully we can avoid it. But yeah, the entire family ended up getting a little sick. Good morning to everyone here. Erwin, what's up? Defin, what's up? Martin, Jeremy, good morning. Nathan, thank you all for being here. Luna, June, good morning. Thank you for being here. Stuart, what's up? Amit, you need a lint roller. That is correct. I do not own a lint roller. I absolutely need a lint roller. H. Allman, Phil, Diane, Jasmine, good morning. Vadim, Edmund, Omer, thank you, everybody, for being here today. Jeffrey says you talk really fast, dude. Yes, that is a function of this channel. You know, the reason I talk really fast is I'm always afraid that if I talk too slow, people get bored. Or just people are like, all right, move on to the next topic. So that has always been the impetus to talk really fast. Sometimes it ends up going too fast. Sometimes it's not fast enough. But yeah, that's what we tend to do. Because I watch other streamers sometimes, and then they take so long to get out a point, and I'm like, all right, we got to get things moving. So I think we cover a lot of things on the show because we talk for 3 hours and we talk fast for 3 hours. So hopefully there's enough stuff to get into. All right, so let's get into it. Let's start off with, so I talked about this last night on the Future Show, but for those that weren't there, I think it's an important topic to start off the discussion with, which is why is the stock market crashing? I know that's kind of vague and broad, but we talked about this last week. The quick synopsis on this, it was a theory that was first introduced by Kris. A lot of people have been thinking about it, and kind of the theory went viral over the past weekend. I mean, you had a lot of big counts kind of talking about this same argument. This post that I made on Twitter got about 6 million views, and I posted it on March 4th. So a lot of people have been thinking about it, been talking about it, and more people I'm seeing are at least somewhat saying this theory kind of makes sense. And the theory is as follows. We have $7 trillion of debt to refinance in 2025. Bond yields are currently high right now. The Trump administration does not want to finance their debt or refinance their debt at 4.5%. So in order to get rates to come down, we need JPOW to lower rates. JPOW's not lowering rates because inflation's not coming down. So how do you get rates to come down? As crazy as it sounds, you've got to kind of tank the markets. And I know a lot of people might not agree with this thesis, but I would encourage people to go a little bit more deeper into the sort of mechanisms of how this thesis is somewhat making sense based on the argument that the government's in a pickle right now, and the White House needs to be able to refinance their debt at a lower cost, and they need to get rates to come down, but they can't get rates to come down because inflation isn't coming down, and tariffs are definitely not going to get inflation to come down. But what can get the Fed the authority to lower rates to bring yields down is if the 10-year, the bond market, starts to price in a recession. Usually the bond market starts to go up if there are fears that inflation is going to be higher. And one could argue, well, why isn't the bond market at like 5 or 6% if inflation is going to be higher because of tariffs? Because you can look at a lot of different economic studies. The end result of tariffs has some inflationary impact. Well, the reason the 10-year is actually down from its high of January, I think 15th at 4.8%, is because now the bond market is starting to say, hey, we don't think NVIDIA is going to be the best deal this year. We don't think Meta is going to be the best deal. We don't think the broader U.S. economy is going to be as good. We're going to look at a lot of charts today that are kind of insinuating that same thing. You got Bank of America, a lot of Jefferies, JP Morgan, a lot of sell side analysts saying, hey, we're not that bullish U.S. equities anymore. And so we'll talk about all those different individual pieces of analysis. But the core argument is the bond market is feeling the volatility caused by tariffs is leading to the stock market not being the choice of allocation of capital, which means what do? They buy bonds because that's safer. If you buy bonds, yields come down. And if yields come down, this is what the Trump administration wants. They want a growth scare, maybe not an actual recession, which we'll talk about, but they want the fear of a recession, which is, I know it's crazy and I know it's conspiratorial, but if you I've read a lot of articles this weekend kind of echoing the same exact argument. And we heard from some pretty well-known analysts making the same point as well, that if you create enough fear in the markets, even if you don't actually have a growth scare, the fear of it in and of itself is enough to get bond yields to come down as people start buying bonds, which forces the Fed's hand at cutting rates, which is what the Trump administration wants. Even if the stock market suffers in the mean term, rates come down, which is all that matters to the administration. And if that happens, then I think the volatility that we're seeing right now could continue to we could continue to see a lot more of that volatility. This is Tom Lee basically echoing that thesis on a podcast he did over the weekend.
Well, since you brought that up, one of the charts that went around this week, including me spreading it, but like a lot of people were sharing that GDP Now chart. And I know there's some funkiness about the turnover from January to February with some of the data. Let's not take this as an actual forecast, but that's a pretty extreme drop. We went from a 2.8% GDP Now reading from the Atlanta Fed to -4.
Yeah.
Outside of the pandemic, can you recall a drop-off of that magnitude? Even if there are all these nuanced reasons for why it's data related and not, or it's a quirk of how they collect the data, it still seems extreme.
Yeah, it's big. I mean, it does paint a picture that economic momentum has slowed. So,
or the brakes have slammed on. It looks like to me. Okay.
That's right. At a time when we know even businesses are saying that they've gotten cautious because they don't know what to do with tariffs. So that's why if you look at the markets, they're pricing in a growth slowdown from tariffs, not inflation. And so the Fed, I think the White House wants the Fed to kind of get off neutral. And I think it's increasing looking like the Fed is behind, actually.
So Tom Lee says right there, the White House wants the Fed to get off neutral. How do you do that? You can't just get the Fed to get off neutral unless you actually make the Fed feel like there's pain in the economy, because the Fed, this is the number one thing to understand about this thesis. The Fed is not going to cut rates based on inflation coming down because inflation's not coming down, right? And the Trump administration knows this, and they know tariffs are probably inflationary. So the only way you get the Fed to actually decide to cut rates is by making them feel that there is an actual slowdown in the economy.
So if they really want the 10-year Treasury to fall, the yields, keep going.
Yeah.
Because that yield is not pricing in inflation anymore. Now it's pricing in recession.
Yeah.
Or starting to.
That's right. And
Okay.
then and the only difference is nobody wants to even get within, 10 yards a touchdown of stall speed because it's just too easy to slip into a recession.
So Tom Lee's argument is like, hey, this theory makes sense, but the problem is if we get too close to the sun, we can lead to a recession. And that is the risk. That is this sort of dangerous game that Trump is playing right here, which is that if we get too close to forcing the Fed's hand and actually causing a growth scare that becomes like a growth slowdown, we end up getting a recession. Now, one of the reasons I think Tom Lee is still bullish and I'm still bullish is because although Trump is trying to get the Fed to lower rates by causing this fear, every time the tariffs need to get implemented, which would create the actual slowdown of growth, right? Like, because that's what everyone is so upset about, that tariffs are going to slow down growth, create more inflation, create more job losses because people are going to cut down labor costs to be able to save on their unit economics. Every time we get close to implementing those tariffs, we get a delay. We get a 1 month extension of the tariffs. And so it's this weird game of cat and mouse, which again, I don't know what the end result of it is going to be, but it's almost like Trump wants the market to get scared to then buy bonds to get the Fed to cut rates. But when it's time to actually like make the market scared by actually implementing the policies that are so growth scary, they don't get implemented. They end up getting delayed. And the reason I think they're getting delayed is because if you look at what happened last term in 2018, they ended up getting to a deal, right? Now, 2018 was very volatile and it sucked for the stock market. But in 2019, Jay Powell started cutting a lot of rates. And Jay Powell started cutting a lot of rates. That was obviously good for the stock market. Stock market rebounded. And then they ended up getting a deal with China. And the trade war kind of ended from there. So if they go the same route at this point, we're going to kind of see how this ends up playing out. And remember, this is a theory. This doesn't have to be the correct argument for why this is happening. This is just based on all the research I've been doing. This is what it seems like. I'm not defending this theory. I'm not saying it's a good theory. I'm not saying it's a bad theory. You could also have a lot of other arguments for why Trump is doing this that are just based in ego, right? That he thinks tariffs are the best and that ego is enough to create a stock market collapse because he cares so much about implementing his tariff thesis. Like, you could have whatever reason you want. The point is, I think we can't be oblivious to the fact that he is quite literally telling us to his face, he does not care about the market. He cares about rates coming down. And quite literally, he said that on Fox Business on Sunday.
But you may get it again with these tariffs, right? I mean, one CEO said to me, my input costs have already started to go up. I'm going to have to raise prices.
In the meantime, guess what? Interest rates are down for the last 3-4 days at good levels. I mean,
that's the first thing he says on a question about, hey, private CEOs are telling me input costs are going up because of the tariffs, which are going to affect the consumer. He diverts the entire question to, well, interest rates. I mean, if that's not the most obvious telltale of where his priorities are, then I don't know what is.
Input costs have already started to go up. I'm going to have to raise prices.
In the meantime, guess what? Interest rates are down for the last 3-4 days at good levels. I mean, you know, when you add interest rates, you're talking about it's gone down. I've been saying, let's get interest rates down. You know, nobody ever gets rich when the interest rates are high because people can't borrow money. Interest rates are going down. You know what else is going down? What have I been trying to get down?
Oil.
Energy. Energy's going down. I'd love to see energy go down. You know, energy is really what caused it. They screwed up my energy. I had the most energy and they screwed it up. Then they went back to it. It was going through the roof. They went back to some drilling, but it was gone. It was hopeless. It was lost. But energy's gone down and interest rates have gone up over the last week. That's a big thing. I love that.
But you may get it again.
Sorry, I was muted. His last sentence right there is like, I love that, right? I think there is an argument that because he's so intense around the concept of getting interest rates to come down. Notice his logic right there. His logic is, hey, no one gets rich when interest rates come down because mortgage rates, financing a car, yada yada, right? Like, you can't really do anything when rates are super high. So if people get rich, or people have the ability to even, you know, survive in an economy when we have low interest rates, when we have high interest rates, it's very difficult. And so on a question on tariffs and the implication for the consumer, and obviously the implication on the stock market, Trump's analysis goes back to interest rates. And I just don't think that can be ignored. I think it's very difficult to ignore that. as an investor, because if this is what the president of the United States is instructing his administration to engage in, which is policies that, or at least the resemblance of policies that make the Fed want to cut rates, then I think we have to take him seriously. I think we have to take him seriously. Yeah, there are some problems with X. Mine isn't loading as well. For those that are having issues with X, mine was being weird with the loading. I thought it was a Wi-Fi thing, but I think it's an X thing right now. So if you're having problem loading your posts on X, mine is not also loading as well. So yeah, that might be a thing that everyone is dealing with right now. So that is my thesis on it, or that is my analysis of what Trump's thesis is. And again, let me say this over and over again. I don't know if this is correct. I don't know if this is true. I don't know if this is real. This is just when you put the data together, this is what it looks like. And if anyone else has a theory on why the administration is engaging in this way, I would love to hear it. But from all the data that I've compiled together, and based on listening to Basent, listening to Howard Lutnick, listening to Trump talk, this is what they're trying to do. You can disagree with it. You don't have to agree with this theory. You don't have to agree with what Trump is doing right here. But this is one theory of many theories that are out there. This is the one that I think has some of the most data to back it up, at least based on what Tom Lee is saying, what Josh Brown is saying, what some of these people in the administration are saying for how the administration is actually thinking of rates right now. Yes, but the 10-year rate is at the same level as mid-December. I agree, and that 10-year has to come down. So this is my point. Like, this is a dangerous game that Trump is playing, because if the 10-year does not come down aggressively and he doesn't get rates to come down, then this is not going to work, right? So the game he's playing right here, I think, is a very, I don't know if this game is going to work, but I do think there's a world in which it could work. If it doesn't work, then yeah, like this 10-year is going to be in a tough situation. The market's going to be in a tough situation. Also, what doesn't help him is a good labor market. The ironic thing about this is he wants a growth slowdown to get rates to come down, which again, in that interview, it's very important to read between the lines. When he's asked about the nature of tariffs and the implication on the consumer, he says the consumer cares about low rates, not tariffs. It's like, well, the consumer is definitely implicated by tariffs, but he's like, no, it's not about tariffs. It's about rates coming down. And if the tariffs are what caused rates to come down, that's where he gets excited about this. So if rates don't come down, that's when we have an actual issue. And the problem is the non-farm payroll report that we got on Friday was really good, 150,000 jobs. The market wanted 160, but like 150 is not bad. And Trump took credit for that, right? He did this whole press conference in the Oval Office where he was talking about why he's revitalizing the private industry, yada, yada. If we keep getting good jobs reports, we are not going to get the probabilities of getting a rate cut to increase as dramatically as Trump wants it to increase. And how do we know that? Well, if we look at the probabilities for the month of May, it was at 50% before the non-farm payroll report. Now it's at 37 because that report was actually pretty good. And so I think the strategy that Trump could be deploying is that he wants short-term pain for long-term gain. I mean, I said this last night, but now in hindsight, it seems kind of obvious when Jim Cramer on the floor of the New York Stock Exchange asked him, hey, like, should people buy stocks? He was like, well, there could always be dips. You know, it's interesting that he said that. It's like almost they've been thinking about this for a while, that, hey, there's going to be some short-term pain in the markets to be able to get rates to come down, but it's inevitably what they have to do if they want to go this route. Is it the right route? I don't know. We're going to find out in the coming months. But it could be one of the routes that Trump is taking. Regardless, we're going to find out over the coming weeks how this ends up playing out. This is one theory that's going around, and we will see if it ends up working. Another theory that is going around is that Doge is going to help get that 10-year to come down because we are cutting more on the expense side. Here's what Trump had to say about Doge over the weekend.
You just said, what he's done is unbelievable. Now, you could then add some, well, but what about he's found hundreds of billions of dollars worth of fake contracts. And I read them, just a tiny portion of them the other night. Transgender surgery on mice. Hundreds of, I mean, the money they're spending on all of this stuff, the whole thing's a scam. And you'll find ultimately that the money that they sent comes back to a lot of the people that made those deals. Okay, you're going to find that. What he's also done is made people realize how many people should be cut. Because normally you go in and you say, all right, cut 4% of your workforce. He said cut 50%, 60%, 70%. That's a big thing. Now, he's done a great job. You just said, what he's done is unbelievable.
So there you have Trump basically saying that Doge is the, you know, next sort of solution on the sell side for the 10-year that can get this thing to come down. And I mean, look, you know, Doge has been making some progress. We're going to see if it can actually make the type of progress that Elon wants it to make. But if they can succeed with Doge, to some respect, getting government spending to come down, that's another thing, or another reason you could say for why the 10-year could maybe take a little bit of a breather. I just think you're going to need more to get the 10-year to come down than Doge, right? Like, you're going to need real fears in the economy again for people to pick bonds over Nvidia. And in order to make that happen, again, people have to be really afraid of what's going on in the economy. Here's what Trump said about tariffs last night as well on Air Force One.
It's going to make our country rich again. We have many companies, as you know, auto companies are opening up plants now. We've had 4 or 5 announced already, but many more are coming. And we're basically going to take back the money, a lot of the money that we've given away over many decades. We've lost our jobs. We've lost our factories. We've lost 90,000 factories since the beginning of NAFTA. It's not that long ago. 90,000 factories. Think of that. And we're going to get them back. And they're coming back. And they're coming back in records. Look at what happened with the big chip company, the biggest in the world. By far the most powerful chip company in the world, from Taiwan. And they're going in with $200 billion of money, and they're going to build something that's going to give us 35-40% of the chip market in one company. No, it's going to bring it back, and I think it's going to make us bring us to a level that we've never had before.
Again, the Trump administration is very headfast on engaging in this strategy, and we are going to find out if it works or if it doesn't work. But I think we have to take the administration at their word in terms of how they are thinking about tariffs. If they are serious about deploying them, even though every time they get ready to deploy them, they end up, extending them. It's the strategy that they want to go for. Now, what's also really important about this as well is that the aluminum and steel tariffs, they're going into effect in 2 days. So those are 25% tariffs. Those are not getting delayed from my understanding. Mexico and Canada tariffs were delayed until April 2nd, but aluminum and steel definitely will go into effect in the next 2 days. And so when those do go into effect, we are going to see the impact of those, which will be the first kind of real tariffs in the stock market that end up going into effect based on what the Trump administration had to say. Here's one more piece of coverage in terms of what Trump said about the stock market last week, and then we will get into a couple other headlines that we got going on right now.
Speaking about the recent stock market volatility, Eamon Javers joins us now with more. Hey, Eamon.
Yeah, good morning, Joe. In an interview with Fox News yesterday, President Trump addressed last week's stock market turmoil caused by confusion around his tariff agenda. In one exchange, the president suggested that calls by the business community for clarity on that policy are just a talking point for the big globalists. Here's what he said.
I think that they say that. It sounds good to say. But for years, the globalists, the big globalists, have been ripping off the United States.
And asked if he's okay with the stock market going down, the president dismissed the idea of short-term focusing on the stock market.
What I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that.
So even listen to what Trump says from that perspective, right? When asked about the stock market, instead of saying that, we'll look at it here and there, he's saying, look at China. They have a 100-year perspective. We have a quarter by quarter perspective. You don't say that if you think quarter by quarter is going to be good. You only say that if you think, all right, there's going to be some pain in the short term. We got to get ready for the long-term gain. And that's kind of how you get out of that thesis. So I think we got to take him at his word. I mean, if he's saying, hey, short term, like it's going to be bad. Even Scott Bessent said we're going to go through a quote unquote detox period, which to me also means that the government is going to stop spending. A lot of the GDP, or 30% of GDP growth is government spending. If that 30% starts to slow down to, 20%, and Trump says, well, look at China. They think in centuries, we think in quarters. I mean, it's again, if you read between the lines, it's pretty obvious. He's saying, don't expect any short-term momentum. You should be expecting some short-term pain versus long-term momentum. At least that's how I'm reading and interpreting what ultimately he's trying to say. And that's what we're getting. We're getting some short-term pain as a result of the policies that he is deploying right now, but he believes those policies will be more effective over the long term. Bitcoin right here is up from 79,000. It was at over the weekend. Now it's at 82.8. It was at 97 last week. The Bitcoin Strategic Reserve was announced. That reserve was kind of a sell the news event. Bitcoin right now at 82. It is up on the day, which is nice. It was at 79 last night. So nice to see Bitcoin getting a little bit of momentum. But the drop from, I think, 87 to 82 over the weekend, that is why Robinhood's down 7%. That's why CleanSpark's down how much? 3%. Coinbase is down 5%, 5.13%. And MicroStrategy also is down 5.63%, mainly because of Bitcoin kind of selling off on this crypto reserve news. And, you know, we'll see where Bitcoin ends up playing out over the coming weeks. But we're red. We are definitely still red. Is the market going to stay this way? Yes. So now here's my kind of overall synopsis on what's going on. Not synonymous, like I said last night, but synopsis. My synopsis is that at the end of the day, the S&P 500 is still only down 2% year to date. So with all the hoopla that's been going on, with all the volatility that's been going on, we are still barely down year to date. Now that means two things. The good thing is that means that, hey, with everything that's crazy that's happened, we're only down 2%. That's like really good, right? The bad thing is with everything going on, and if we're only down 2%, then we've got a lot further down to go. So it's one or the other, right? It's either going to kind of normalize here at the 200-day moving average, which would be very good for this market, and we would be able to kind of form a base around here, or we lose the 200-day and we're headed much lower. My opinion here is that, I mean, could you sell right now and make a ton of money shorting the market if the market falls another 10-20%? Sure, like that is a strategy. I just don't think that's the strategy I would deploy. I think the time to really go short and sell was 3 weeks ago. Now, why didn't a lot of people do it? Well, a lot of people aren't professional hedge fund managers that know exactly when the top and the bottom is. Most people that run hedge funds don't know when the top and the bottom is. So I don't think I would feel bad for not selling at the top and deciding to go short. But now, like you know, Robinhood's down almost 40% from the highs. Is that the time to sell? Not in my opinion. Could it go lower? Of course. But is that the time to sell? Not really. Is that the time to go short Robinhood? Not really. Unless you're expecting a 2022 type of year, right? If you expect a 2022 type of year, then yeah, it's aggressive. But if you're not expecting that type of year, then I don't think that's as big of a deal. Status says right here, says we shouldn't look at the year-to-date decline, but as a decline from all-time high. Well, I agree. So the all-time high decline is already 7% on the S&P as well. The reason I'm using year-to-date is because we measure the S&P in terms of aggregate performance per year. And so that all-time high, the reason I'm not a fan of using that metric is because we probably weren't supposed to get there, right? Like Palantir at 125, Palantir was almost $300 billion in market cap. It was almost exceeding Salesforce's market cap. We probably weren't supposed to be there. That was pure momentum. Same thing with Hood, even though I think you can make a case for why Hood at 65 was actually a reasonable valuation. Probably wasn't supposed to get there that quick within 4 weeks of the new year starting. So I think a lot of the all-time highs we saw on the market as well were aggressive momentum-based all-time highs that we probably weren't supposed to see. It was fueling off that 2024 momentum. And now we've normalized. We are down year to date on the S&P only 2%. I mean, Robinhood and Palantir are still up year to date, right? Even though they're down from their highs. And so to me, from that perspective, it's still not the time to go short or not the time to get aggressively to the point where you start where you want to start selling everything. My strategy right here is writing covered calls. I mean, I think that's also pretty simple. Like the beautiful, I talked about this last night, but the thing people don't talk about when you buy puts is that you need the asset you're buying a put on. So technically, like you're going short on that name, right? You need that name to fall. You need it to actually go down. So if I write a covered call on SoFi for $15, I don't need SoFi to do anything but just not go above 15. And if it does go above 15, okay, I sell my shares and hopefully my average is above 15. My adjusted cost basis is below 15, and then I make a profit and I keep the premium. On puts, if I write a put on SoFi when it's $12.50, I need SoFi to materially go down in order for my put to be profitable. If it doesn't go down, if it just stays flat, which is really what has been happening, and this is my point about maybe now's not the time to go short because SoFi already is down from 16 to 12. Palantir is already down from 125 to 80. So for it to go down again, which is the whole purpose of buying puts as a hedge, you actually need the asset to go down. What if it just stays flat? What if it consolidates? What if we're in this ping pong market where it goes down a little bit, then it comes up a little bit? Your puts don't print, but what does print is your covered calls. Because as long as the stock doesn't go up, your covered call continues to gain momentum. If the covered call, if stocks actually go up, then your put is a hedge because you're okay with losing that money, that premium you paid because your entire portfolio is going up. But if you're buying puts to make money on it and the stocks don't go down, I think the better strategy right there is covered calls instead. especially when there are so many stocks, NVIDIA, SoFi, Robinhood, Palantir, where the premiums are still incredible. I mean, Tesla, dude, there are people buying freaking $500 calls expiring in 2 months on Tesla. There are those people out there that will pay a premium for those strikes. So I think that's the strategy that I would be deploying right here. It's not really selling everything and going into cash. I mean, if you want to high class your portfolio and get rid of some junk, take some early losses, I don't think that's the biggest deal in the world, especially if you're a little bit afraid of the volatility and how much worse it can get. But I think now that we're already down a ton off all-time highs year to date, we're still not down that much, which means we could go lower, but is it that much lower to create this monumental 2022 type of year? I don't think so, even with Trump deploying whatever strategy he's deploying around tariffs. So we're going to find out. We're going to find out over the coming months, but that is kind of the strategy that I'm thinking of right now. Admit my clients don't really give a shit. We are down 2% year to date. They care about how much their accounts are down from all-time high. I would tell your clients to stop being, I'm not going to use that word, but I would tell them to stop bitching. That's what I would tell them to do. I mean, look, if your clients didn't sell Palantir at 125 or Tesla at 487, I mean, they really can't be complaining, dude. Like you cannot complain if Palantir or Tesla fall 50% from all-time highs and you didn't take profits at all-time highs. I mean, also, if you're managing their money and you didn't sell for them, then you've got to come up with a hell of a reason for why you didn't sell at all-time highs. And one of the reasons could be, well, let's be long-term investors. But they're probably not paying you to just be long-term investors. They're probably paying you to actively manage their money. So if you're actively managing their money and you didn't take profits at the top and now they're bitching about how they're down 50% from the top, who do they have to complain at? The person who's probably managing their money, right? So, I mean, like, to me, fund managers are in the same position that a lot of us are in, which is that they didn't sell at the very top, because most people don't know how to sell at the top. And most people can't recognize that Tesla at 487 is probably not going to 600. It's probably going back to 250. I didn't think it was going back to 250. I was in the camp of like, okay, momentum's there. Tesla 487. Let's see if we can go higher. But if ultra high net worth individuals are upset that they didn't take profits at the very top of the market, welcome to the stock market. Like, most people don't know how to do that. Most fund managers aren't worth any of their percentage allocation fees because they don't actually know how to manage a portfolio. They're just as good as you or me, right? Even if they have some fancy FINRA license to manage money. So I don't think anyone should be complaining that Palantir is at $80 when we are trading at 89 times price to sales. Even Tesla is still trading at some pretty aggressive multiples, which is not a growth stock anymore. Tesla did not grow last quarter. And it looks like in Q1, they're probably not going to grow again because their automotive sales don't look that nice right now, down 4% of the pre-markets. If you didn't sell at 487, I mean, who else do you have to blame? Blaming Elon and Trump about not selling at the top, to me, is a loser mentality. Like, and I know it's fun to have someone to blame, but if you didn't sell MicroStrategy at 540 because you thought it was going to 1,000 because Bitcoin was going to 1 million, I'm sorry, but that's on you. Like, that's not on anyone else, you know? And it sucks. I get it. It sucks. But at some point, we have to take personal accountability as well. That's why I'm not bitching about not selling Robinhood at 65, because I never was going to sell it at 65. Like, my mentality, you know, when I say I'm not selling, I'm not selling. I didn't sell Palantir at 25. Why? I bought Palantir at 103. I know it was a little bit of a fun, just like, let's celebrate that we're at 100. But the reason I have not sold a single share of those two companies is because I believe in them for the long term, and I have to deal with the volatility of, and I mean, I dealt with the volatility for Palantir when it was at $6, when Robinhood was stuck at like $10. Like, I've been through that, right? And so this is not any different. This is just continue to hold on to the long term and see how it plays out. But if you're going to actively manage money, you've got to be able to sell some portion of assets at the top. It's just really hard to do that. But that's why it's also really hard to manage money. And so, I don't know. People complaining about that, to me, is stupid. Like, it's the market. Things go up, things go down, things get aggressively expensive. If you don't take profits right there, you have no one to blame but yourself at that point. But again, I don't think people should be blaming themselves, because it's really hard to do. And because it's really hard to do, there are certain sort of mental tricks you have to deploy of just remembering, like, you're a human being, and it's not always easy to time the exact top and bottom. Let's speak about some bullish indicators that we have. We talked about a lot of bearish stuff. Let's speak about some bullish stuff. So the US dollar has suffered its biggest weekly loss last week since November 2022. Now, what's really exciting about that is that, well, what happened after November 2022? we had a nice recovery in the broader stock market. So the dollar right here at 103, this is what I've been personally looking forward to all year. And one of the implications of Trump's tariff strategy is that the dollar is losing some of its value, which is good. It's not horrible. Even though, you know, the 10 years coming down is also kind of what he wants. The dollar has to come down as a result. Trump says he likes a strong dollar, but I think in reality, he wants the dollar to come weaker for more countries to be able to engage in friendlier trade with the administration, because when you have a low dollar, it's easier for companies to buy our goods. So that is one thing that I'm looking at that is actually not that bad of a thing, to have the dollar come down. The last time it came down this aggressively was back in November of 2022. And obviously that's when we had a bottom in the equity markets. Here is a argument from Morgan Stanley. So Morgan Stanley's Mike Wilson says tariff concerns and lower fiscal spending could push the S&P 500 down another 5% before a choppy rebound. I think that's not unreasonable to imagine at all, especially if the tariff volatility continues to be as aggressive as it is. He expects the index to hit 5,500 in H1 before recovering to 6,500 by year end, a 13% rally from current levels, which is actually, I mean, it's not crazy to say we hit 5,500. We're already at right below 5,700. To go down another 5%, I think that's pretty normal. And I think honestly, it's that flush out that everyone's waiting for that we've avoided for a couple months. But like, if we get that flush out, I don't think that's the worst thing in the world. Wilson warns that in a recession scenario, the S&P 500 could plunge 20%, but improving earnings revisions may support stocks in the coming weeks. The reason I don't think we get that 20% plunge is because earnings growth has still been phenomenal across the board. And because earnings growth has still been phenomenal across the board, I think earnings growth is enough, as long as we avoid a recession, to maintain the growth momentum that makes NVIDIA, Meta, Google, Amazon, especially if they get to egregious levels. Like if Amazon gets to 170, NVIDIA gets to 90, Meta gets to, 480. Like if we get those really hardcore big drawdowns, there's $7 trillion on the sidelines. And those $7 trillion, along with people that are stuck in cash, I mean, they are going to start looking at equities very seriously and say, wait a second, Google trading at 10 times 2026 earnings. If it falls even further from 170, it's at 169 in the pre-markets, down 2.6%. That's going to get attractive. And so I think from that perspective, that is a reason for why, at least when things dip, they dip in a reasonable way. The problem with 2021 into 2022 is when things were dipping, there wasn't earnings growth. Like when Meta fell to 88, it probably didn't need to get that egregious. But even Meta, when it went from, I think 350 was the top, 347, it went to like 240 and then 220 and then 180 and then 88. Its earnings growth was horrendous in 2022. They had to do a lot of layoffs to start getting people to justify the fact that, all right, they're getting their stuff in order. Right now, earnings growth is great. And until we get earnings growth to start to deteriorate, the lower these equity prices go, the better these equities look. I mean, Robinhood gets down to $35 and they deliver a solid Q1. It's going to get really freaking cheap. And the question is just if they can maintain the earnings growth to get there. A couple other bullish indicators. We talked about this last week, but last week on Wednesday, we had the third highest volume of put options bought on the S&P 500 in the history of the stock market. The last two times that happened before that, that was a stock market bottom. So that's one argument for why the market theoretically could be bottoming. Another argument is that the last time we lost the 200-day moving average on the S&P was November 2023. And obviously we had an amazing 2024 after we lost that 200-day moving average. So far, we're basically stuck at the 200-day on the S&P. We haven't meaningfully lost it. I mean, we lost it on Friday. We were at 565, and then we had a quick rebound after J-Powell started talking. We're down below in the pre-markets right now, down 1.38%. It's going to be very interesting in 6 minutes if we open green, if we have some green candles, if people start buying this dip, or if we continue to flush lower. I guess we'll see what happens in the next 5 minutes. But we're already meaningfully below the 200-day. If we get back above it at 570, then we can recapture it. If not, then we're headed much lower. And maybe we kind of need another, little 5% drawdown to just completely wipe it out in order to keep going further. But last time we did lose the 200-day, it was actually, it was a buy the dip situation because we went a lot higher. So we're going to find out over the next coming minutes kind of how this plays out and where the market takes it on the second week of trading. Let's hear and get their thoughts on what they're thinking about when it comes to a bear market, recession, and the probabilities of those two scenarios. And then we'll keep going from there.
Coming off a volatile week that has left investors anxious about what comes next. Joining us right now is Lori Calvasina, RBC Capital Markets head of U.S. equity strategy. And Lori, last week was a bit rocky. This morning, we're looking at the futures down pretty significantly, too. How are you feeling about things?
So look, we haven't changed our target. We've been talking about sort of our base case and our bear case all year, and we've said the risks of our bear case have risen. And sort of embedded in the idea of our base case was a 5 to 10% drawdown. So we thought the market would end the year at 6,600, but have a 5 to 10% drawback during the course of the year that it would bounce back from. I do think the risks now are rising that we get something worse than a 10% drawdown, something say in the 14 to 20% range. We haven't pivoted to that, but I do think it's an important distinction because you're starting to see other houses, frankly, start talking about the risks of a recession are rising. And I think it's important to remember in equity markets, sometimes we have something in between just garden variety pullback and recession pricing. A recession is worth about a quarter to a third of a drawdown in the market. From GFC to to COVID, we had a
great financial crisis.
The financial crisis. We had a number of these 15 to 20% drawdowns, which were growth scares. So fears of a systemic issue, the U.S. debt downgrade, sovereign debt crisis, the 15-16, kind of mini recession hit the industrial sector, not the consumer, and then sort of the debacle of 2018. And so I'm worried about that kind of scenario manifesting in markets. But not there yet, but that's where my radar's up.
But you still think it's temporary. This would be a sell-off that would be a buying opportunity.
I think that valuations, and we wrote about this in our weekly today, are starting to get interesting. If you look at the small caps, I'm an old small cap strategist, so they're always a good barometer when things get a little nutty in the market. And we're at 14.5 times. We've broken below average. 2015 through 2019, average tended to be the bottom. Recessions are about 11 to 13. So you're actually not that far off from recession pricing in small caps. The broader markets have got a little bit more work to do. S&P X top 10 is trading around 17 times. The average is more like 15. So we need to break a bit more than that. But things are starting I wouldn't say problems are getting fixed, but froth has come out of AAII on the retail investor survey. We're getting some froth out of these valuation metrics. Even the top 10 market cap names in the S&P are trading around 14 times or 24 times. That's down from 30.
I mean, that's an investor's point of view. Does that make you actually happy to see something like this? If things start to get a little more reasonable, start to come down in price, it's a buying opportunity. Okay, so.
Well, certainly I would say.
But you don't worry about the bigger issues that would mean that we're down for the year?
Look, I think that stocks do tend to go down, and we've had a number of, up years and some fantastic up years. And if we hit my bear case, which would be about 57.75, we'd be down a few percent. And that is typically what happens when we get down years in the equity market. The big major crises tend to be very, very rare. You never want to see stocks go down, especially when it represents economic angst, right? There are real people out there that get affected by that. But I do think we just came into the year very frothy on the CFTC data, extremely frothy on valuations. I think we were going to have a bit of a pullback, 5 to 10% again, one way or the other. Again, risks of going beyond that are rising, but I do think we needed to get some of this froth out.
So kind of the same argument that Mike Wilson had this morning as well, which is that, hey, we were frothy. And I mean, they're kind of right. Like we had, the meme coins going crazy. Fart coin was worth $1 billion. Like there is a hell of an argument for that, for the fact that like we were a bit frothy. We needed to get the froth out. The froth has now started to come out. Multiples have started to compress. Obviously, no one enjoys that process when it does happen, but sometimes it is incredibly necessary. I mean, you have things like Robin, ROBN, this 2x long Robinhood daily ETF. Like when these things come out, it's because there's too much liquidity in the system. And the reason I never bought this thing is because Robinhood could take a decline and this thing could fall much more aggressively because it's leveraged. Same thing with NVDL or BITX or all these different single stock leverage ETFs. A lot of that froth is leaving. And I think that froth is leaving is not the worst thing in the world. The question is just going to be how long it takes for that froth and that momentum to get out of the markets. But we're going to find out as we enter the second week of trading for the stock market. Monday, March 10th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Here we go. 52% of you think that we open red on the day. We did indeed open red, 1.45% down on the S&P 500. Tesla is down 4%. Tesla getting hit pretty ugly. Robinhood's down 9%. It's 50 cents away from going below 40, which at this point it might as well go below 40 if it's sitting right there at 40.50 right here, down about 9.3% here right now. Oracle is down 3%. They have earnings later today. SMCI is actually flat, so down about 0.18%. SoFi down 3%. Hims down 2%. DoorDash, even though they got into the S&P 500, that one is down. That one is down 2.4%. Uber down 1.5. Palantir down 3.9. TKO Group, they also got into the S&P 500. They're down 2.25%. As we get into the market open, NVIDIA is down 1.9%, 110.53. That one continues to get hit. AppLovin, that one's just been disaster since the top at 500. That one is kind of the classic momentum trade that has gotten hit pretty badly, down 7.7%. Amazon's down another 2%. Meta is down 3%, looking like it's very close to coming below 600. Again, the S&P 500 down about 1.3%. What is green? Coca-Cola, Verizon, and Hershey's. Coca-Cola, Verizon, and Hershey's. SMCI goes green. Interesting. SMCI has gotten sold off very badly. So I would expect a little bit of a bounce on SMCI. And so we're seeing that right here, up 1.6%, 38.92. NVIDIA still red. So NVIDIA, well, there's some green candles on NVIDIA. You got some green candles. Let me check the semis. Yeah, everything's still red. ASML 5%, Broadcom 2%, Qualcomm 2%, Marvell 3%, Dell's below 90, Micron down below 90 as well, 3%. SMCI is the only green one. AMD is at 98, NVIDIA is at 110, Intel's at 20. Intel was at 27 last week at one point on those acquisition rumors, but that one continues to go down. And we are seeing some more red. Walmart's below 90. Yeah, there you go. Walmart down 2%. Google 165, dude. Holy crap. Tesla below 250, 249. My goodness, the one thing in your portfolio that's probably green is those covered calls that are hopefully at least, I think every covered call on any stock outside of Verizon and Hershey should be going green right now, but everything else is red. Archer is down 5%. Amazon's down 2%. MicroStrategy's down 8%. Coinbase down 6%. NVIDIA 110. It's holding on to 110, but it looks like it's going to give it up pretty soon. Robinhood should be down badly. Yeah, Robinhood down almost 10%. The reason Robinhood's down is because of Bitcoin. Bitcoin fell like $7,000 over the weekend. That is tough for Robinhood. They also didn't get into the S&P 500. They are 3 cents away from going below 40. Yeah, there you go. Robinhood below 40. There you go. I think last week we saw the signs of it happening, and now it is indeed happening. Tesla below 250. Just disgusting. Where's Celsius? Celsius is, I don't, why is Celsius green? Like, what? I don't get it. Celsius is still a growth stock, right? Is it a value play now? Did Berkshire take a stake in it? Is there something that I don't understand about this one? Redfin is up 78% because they're getting bought out by Rocket Mortgage for $12.50 a share. So this company, Redfin, at the height of 2021's bubble, got to $98 a share. They are now getting bought out at $12.50 by Rocket Mortgage. So if you had any Redfin, you're up 70% today. You should be happy. If you didn't have Redfin, then you kind of go about your business and you move on. But if you did have Redfin, then yeah, you're getting a buyout at $12.50 a share. Grab's getting hit badly as well. Grab, goodness gracious, down 7%, 427. Again, that is not a Grab specific thing to me. That's more of an algorithmic thing that's happening across a lot of these stocks. I mean, does Grab deserve to be at 420? No, not after those earnings. Does SoFi deserve to be at 1189? No, not after their earnings. Robinhood, I definitely don't think deserves to be at 3975. Right now, I think what's very important to do is protect your emotions, because a lot of these are algos that are getting hit pretty badly. Is some retail selling or some money manager selling? Of course. But when things get down to these types of levels, yeah, to me, this is a lot of algorithms getting ready to just take the market down lower. And, it's the nature of what happens. If the S&P is going to go down 3-4%, these individual stocks are going to go down 10 to 15%. Apple, 232. Apple was at almost 245 last week. So Apple's getting hit badly right now. Yeah, earnings don't matter. Correct. Earnings do not matter when we're in a market like this. I mean, because you could have them. I mean, think about DoorDash, right? Getting into the S&P 500 is big news, but market's selling it off. Now, they're only selling it off 1% instead of 5% like some of these other names. But if you can't go green off news like that, which is supposed to be like one of the best pieces of news for any company, then yeah, it's a pretty rough situation. NVIDIA right here, 110. That one looks like it's about to go down below 109. Google 165, Tesla 247. So no green candles are coming in, or no kind of bottoms are being formed from what I'm seeing. It seems like it's just continuing to fall. Well, actually kind of. Robinhood just rebounded from 39.70 to 40.25. So maybe that's a little bit of a bottom that we're seeing right now. SoFi as well, 1188 to $12. What, 934? Maybe we're putting in a little bit of a low. If that's the end of the pain, at least for that immediate moment, but we're going to see. S&P, S&P just got a green candle. All right, so at 934, it looks like people stepped in. There's that green candle right there. 566 was the low. 568 we're at right now in the S&P. At 934, you had either algos or other people step in and decide they were going to take advantage of some of these dips. We'll see if that lasts. UK trading 212 halted NVIDIA. Wow. NVIDIA gets halted. NVIDIA 109. I mean, NVIDIA shouldn't get halted for being down 2%, but maybe there was just way too much volume to the downside. ELF, where's ELF right here? Yeah, dude, this is weird. ELF's up 3% and Celsius is up 5%. I understand why Hershey's is up if you looked at cocoa prices. I understand why Verizon's a safety play right now. I get Coca-Cola. That's sort of a traditional value play. I don't get Celsius and ELF. That one is a little hard to understand. But that one's happening. VG is up. Consumer staples. Yeah, let me look at the heat map right now and see across the board how bad is it. Let's see if I pull up the. Let me pull up the exact heat map. Yeah, this one's not uploaded right now. It's not updated. ELF is up now 3.79%. Why do you guys say the market is opening 1 hour sooner now? Did we have daylight savings time? I saw that comment over and over again. Are we having did we have daylight savings time today and I didn't know or something? Was today daylight savings time? Wait, was today daylight savings? It was? Oh, so I woke up an hour early today? Or an hour late? Was it an hour early or an hour late? That's why you guys were confused by how I scheduled the market open. Because I was like, why are people saying it's an hour early? Like it's the normal time. It was yesterday? It was Sunday? Dude, I was sleeping all day. I had no fucking idea. We saved an hour. Hold on. We were an hour. Okay, so we lost an hour. Okay. Dude, how did you expect me to know that? I didn't know that yesterday. I didn't wake up and see if we saved some daylight. It's always on a Sunday. Because everyone, in the I guess it was the Europeans in the chat that were like, why are we starting an hour early? I was like, what are you guys talking about? It's at 8:45. It's a normal time. Dude, I didn't know about this, dude. How in the world did you not know that? I'm sorry. On Sunday, I was more concerned with. Honestly, I was binging The West Wing. I was more concerned with finishing season 1, dude. Season 1 was a good season, so I was more concerned with that than daylight savings time. I wasn't focused on that. Dude, I completely forgot. All right, well, yeah. So technically, it's not an hour early. It's just the United States is an hour early or an hour late. For those that are asking why it looks like it's an hour early, so yeah, I guess it's gonna be like that for people across the world now. That's weird, dude. I didn't even know that. I had no clue. Am I the only one who didn't know yesterday was daylight savings? Did everyone know that? How am I just finding this out? Amit, you are 27 years old. How do you not know time changes are on a Sunday? West Wing Marathon is acceptable reason for missing daylight savings time, though. You know, the older I get, the more I realize I don't know anything. So, yes. You're telling me no one knew yesterday was daylight savings? There was no one who was also in my situation? All right, well, it is what it is then. I didn't know, dude. I didn't know. Well, we gained an hour and another hour to look at the red candles. The good thing about sleeping for 15 hours on Saturday, which is what I did, is that I didn't have any red candles in my dream. I did have some wild dreams though, dude. I was in a car. I was getting shot at. I was like trying to protect it was some weird shit, bro. It was some weird dreams, but I'd rather have those dreams than red candles. I got to avoid the red candles for at least 15 hours. Coinbase down 7%, Robinhood down 9%, Oracle down 3%, SMCI is now red. It was green. Grinders down 1.45%, Bitcoin 82,000. Bitcoin actually holding up kind of okay. It was at 79 last night, so a little bit of a rebound here. Not the worst thing in the world, but it is down from that 88,000 that it was at on Friday. Rigetti is now down 8%. All the quantum names are starting to get hit. It was up on Friday, which I didn't understand, but now it is starting to get hit. D-Wave down 4%, IONQ down 3%, Rigetti down 8%, QUBT down 3.78%. The S&P 500 again getting 2 green candles from that bottom of 566, now at 568, maybe putting in the low for the day. We'll see. It's very early in the day, but at 9:34, some prices were getting really aggressive. Microsoft is down 2%. Apple's down 3%. Meta's down 3%. Google's down 3%. Amazon's down 2%. Nvidia's down 2%. And Tesla is down 6%. Tesla's low was 246.5. Right now it's at 247. Tesla continues to get hit pretty bad. Yeah, dude, I was getting shot in the dream. It was weird, bro. It was weird. Like I was like behind a car and they were shooting at me. I don't know why they were shooting at me. And then I ended up in this imaginary world after like that. And I had to like, it was like Super Mario Brothers. You had to like fight for your life in new levels. It was weird shit, bro. That's what happens when you sleep for 15 hours. You get some weird dreams. But in the midst of all those dreams, I didn't see any red candles, which I was very grateful for. I was very grateful for that. And then as soon as I woke up, dude, no lie. As soon as I woke up on Sunday, I think I woke up at like 2 p.m. I woke up in the middle of the day. I see Bitcoin just collapsing. I'm just like, what is going on, bro? I have like 17 Robin notifications. Bitcoin's below 88. Bitcoin's below 87. Bitcoin's below 86. I'm like, you know what? I don't need to know that, Robin. Just let me know when it's down every 10,000 at this point. I don't need to know every 1,000 because it was a lot. It was a lot of notifications. But nonetheless, we are still down right here. Palantir holding above 80 somehow. Palantir, again, you guys got to give Palantir a lot of credit because Grab collapsed, Robinhood collapsed. I know Palantir from 125 to 80 as a pseudo collapse, but if you assume that 125 was probably never really supposed to happen because you know the momentum was just too strong to the upside, the fact that it's holding these multiples at 80 to me is beyond impressive. And you know, if we gap down to 70, I would still say it's incredibly impressive to be trading at these levels. I mean, it's really testament to either money managers are taking advantage of this dip and they're buying, or retail's not selling. And I think if retail wanted to sell, they would have sold by now. I don't think retail is going to randomly wake up and say, yeah, it's time to sell. So people are diamond handing it. People really are diamond handing it. And I think that's what's keeping it up and getting some of the momentum. Yeah, some of you guys are saying in the chat, I've been waiting for 70, 75, and it hasn't happened. I think a lot of people are waiting for 65. That's the level that I've heard just anecdotally people say, you know, when we get to 65, I get more excited. And we just haven't got those levels since early January. Even Nvidia collapsed, right? A lot of these names have just collapsed. Nvidia, Tesla, Grab, Robinhood, MicroStrategy, Palantir. If you assume 125 to 80 isn't a collapse because 125 was really just momentum, I think a collapse would be like 80 to 50. That would be like your real collapse that would be emblematic of what we're seeing in a lot of these other names. That hasn't happened yet. And as long as they crush on earnings and the macro kind of stays okay, hopefully we don't see that happen. SoFi right here at 1208, that's down 4%. Again, you got a green candle from 1188. So we are looking like 934 was the low. We still have a long day left, but so far it does look like that's the pain that we're seeing, maybe to be capped at those 934 lows. All right, let's see what other headlines we have. We have a ton of other headlines as we see this market getting hit. David, thank you for the $13.99 super chat. Hey, Amit, do you think MicroStrategy will end up owning 1 million Bitcoins? Do you think it can happen before 2030? Yeah, I think they're already owned basically 500,000, right? So they got to buy another 500,000. Sailor's got to raise a lot of money to make it happen. It's not easy for it to happen, but could it happen? Yes. Is he going to have the debt issuers willing to continue to give him debt at a 0% coupon? Maybe not, but I think it could happen. Like, I mean, for Sailor to raise another 20 billion and buy Bitcoin, yeah, I think it could happen. I just, I don't know if it's going to happen. And I definitely don't know if they're going to have the momentum to be able to keep diluting shareholders to make it happen. It's going to be tough. Speaking of Bitcoin right here, this is a chart I showed yesterday. These are the Bitcoin ETFs over the past 2 weeks. As you can see, it's been a lot of red. The problem with Bitcoin, and if you're wondering why it's red, is just because there's no bidders, right? Sailor's not buying anymore. The U.S. federal government hasn't really introduced a plan to buy Bitcoin yet. They introduced the crypto reserve, which I think is a good thing long-term. In the short term, we don't have any real plan on how they're going to buy Bitcoin. And then the ETFs are not buying Bitcoin either. So I think the volatility in Bitcoin is explained by the fact that most of the asset holders of Bitcoin either are not buying like a MicroStrategy yet. Maybe they'll raise some more money in a couple of weeks and they'll start buying, or they're selling like the ETF holders. Now, granted, Bitcoin is still at freaking 85,000, right? Or 82,000. So it was at 15,000 2 years ago, obviously an incredible return. I don't think anyone can really complain about it. I know people wanted to get to 100,000, and you got a lot of people saying that it's going to go down below it before it goes up, maybe to 60, 70 grand before it gets back to that 100 level. But I think the volatility in Bitcoin is primarily explained by the fact that there's just not that many bidders. Not yet. And maybe that'll change over the coming weeks. But as of now, that is the issue that we're seeing currently with Bitcoin. Celsius, again, still going green. I don't understand it, but Celsius is the sub 7%. Does anyone have a theory for why Celsius is green? Can anyone give me a theory? Because I don't have a theory. I really don't. Bitcoin getting a little bit of momentum right here, up about 1%. Palantir at 81, Celsius up 7%. All right, some other headlines that we have. TSMC. TSMC had a really good number in February. Revenue was up 43% year over year, 7.9 billion in February, down 11% from January, but up 43% year over year. Their strong integrated circuit exports suggest AI chip sales are fueling their growth, and this can't be bearish for NVIDIA. I mean, I wouldn't imagine it's that bearish for NVIDIA. Maybe you could argue that it's priced in for NVIDIA already. The market expected that TMC would put up these numbers, but these are pretty damn good numbers. And so for those wondering, is the AI trade still intact? TSMC should not be growing over 40% if the AI trade was not intact, at least from a CapEx perspective, but they are. NVIDIA right here down about 1.3%, recovering a little bit. It was down almost 3% on the day. AMD, are we green on AMD? We are almost green on AMD in about 22 cents. AMD will be green. So that was the good news on TSMC. Celsius bought Alani. I feel like that should be bearish for Celsius because they're spending $2 billion in cash and stock to buy another company. But maybe that acquisition is getting the street to be super excited for Celsius. Even if, though, like that's still there's still a growth stock that's buying another company. So even if you want to assume it's a super bullish acquisition, like why is it not tanking with every other growth stock? You know, it's like it's kind of just weird. Like I'm not sure how to explain it. Here's the heat map for the market. We're red. We are red across the board. The only thing that's green is consumer non-durables and minerals, energy minerals. Also, the Ukraine minerals deal looks like it's going to get signed. Trump and Zelensky talked about it over the weekend. They're meeting in Saudi Arabia this week to continue negotiations on that deal. So, I mean, that should be something the market's like, but I think we'll get an update by Thursday, Friday if that deal ends up getting signed. We also have CPI, PPI, and JOLTS data this week. JOLTS is going to be on tomorrow, Tuesday, and then CPI is Wednesday. So that's going to be really, really important pieces of data to get us an understanding of where the broader job market is headed. As you can see, most of tech, finance, retailers, pharmaceuticals, they're all getting demolished today. You got some energy stocks that are green, like an Enphase, a Redfin that's getting bought out, Celsius, and you have some consumer companies that are going green as well. Tesla right here, 245. Tesla looks like, did it violate its intraday low already? Yeah, it did. 245.33. There you go. Right back to its lows. Now, Robinhood and the S&P have not violated those lows that they made. They are still holding on to green candles. So now Tesla independently is going red. The rest of these stocks are somewhat holding on. Bitcoin as well just lost its green candle. Now it looks like it's about to go below 82,000. But that one is still relatively flat on the day. Why is Enphase green? Well, you know, it's an interesting one. I think some people's thesis has been that energy as a whole, as a sector, is getting some momentum. SolarEdge had some decent reporting a couple weeks ago, and they got a bit of an upgrade by some firms. Another firm downgraded them, though, so that wasn't the best. You could also just say Enphase is oversold. I mean, at this point, it's down from $300 at 63. You got some people stepping in. At one point, it got to 54, I think. Oil and gas is going lower. I mean, oil prices are going lower, which is technically bad for solar. So I don't understand why oil at 67 is a reason you buy solar stocks. I feel like that's a reason you dump solar and you pile into oil. Or even if you don't pile into oil, the cost of energy is going down so low that no one needs a reason to switch to solar. But yeah, I mean, like for some reason, market continues to rotate into that category right now. So you got Celsius that's green, Enphase that's green, AMD just went slightly green right now. You got your safeties, Verizon, Coca-Cola, Hershey's that are green, AMD right there up 0.72%. NVIDIA going red, even with AMD going green, is weird. Usually AMD follows NVIDIA. So that is a bit of a divergence that we're seeing right there. SMCI going green without NVIDIA going green is also kind of weird. And TSM not going green on those February numbers. Probably the reason why NVIDIA is down. But Broadcom and Qualcomm also down on the day. At 2 p.m., we are going to hear from Trump again. He is having a roundtable with chief executives from IBM, Intel, HP, and Qualcomm. So Trump will be speaking at 2. I don't know if it's going to be streamed live. It might be. Maybe it's not. But he'll be with these companies. These are, older companies. These are not like sort of the super cutting edge AI companies, but they're important companies at the end of the day. And it looks like he's going to be talking to them about chips, about AI, whatever it may be, maybe putting tariffs on chips, who knows. And at 2 p.m., I guess we'll get some updates on what happens with that meeting. But it seems like every day at this point, Trump is doing something with the media in public, pretty much every single day. And we are continuing to see him carry that on in different ways. Also, he had the crypto summit on Friday, which we only got to see the first 20 minutes of their discussions. It really wasn't much. We'll get more details on like why they had that crypto summit in the first place, what kind of comprehensive frameworks they came up with for digital assets legislation. But it was the first step for the White House to be embracing crypto. Tesla 244. Tesla now is losing all of its momentum on the day, even after the little rebound. And I think it's independent. I don't think the market's really following Tesla right here. Market's kind of normalizing a little bit. Tesla independently is going down. S&P got a red candle, but it's not below its 934 low. NVIDIA as well, holding on to 110. Tesla just getting hit. Palantir below 80. There you go. Palantir now is below 80. Currently right now. Yes, X is down. X is not working as well for a lot of people. If you refresh your X, you're probably not going to be able to load your tweets, at least in the moment. For some people, it's working. For some people, it's not. But it's down for me, so it's probably down for some other people as well. Oh, Grok's down as well? Yeah, there you go. Okay, so then Grok, XAI, Twitter, all that stuff is not working currently right now. Where's Hoodie? Are we below 40? We are below 40, 39.98. 39.70 was the low. If we crack 39.70, we are probably going lower. We are probably going lower. Yeah, those are kind of, let me see. There's a couple other headlines this morning that I saw that also were, oh yeah, this is what Morgan Stanley said. So this was important. Morgan Stanley cut their US GDP forecast to 1.5% in 2025 and 1.2% in 2026. They wrote, our forecast changes pull forward the anticipated effects of restrictive trade and immigration policies. If our narrative entering the year was slower growth, stickier inflation, then we now think it's slower growth, firmer inflation. We marked down growth in real GDP to 1.5% in 2025 and 1.2% in 2026. Earlier and broader tariffs should translate into softer growth this year, whereas we previously assumed it would weigh on growth mainly in 2026. They're now essentially pulling forward the lack of growth in 2025 from the potential lack of growth that they were assuming in 2026. And so you've got a lot of other sell-side firms coming out and basically saying, hey, we think it's going to get a little bit more weaker in the broader economy. NVIDIA right here, just below 110, now at 109 on the day. Grab down 7% at 425. DoorDash at 126 or 176. Tesla 243. Goodness gracious, dude. That's down 7.2%. And then MicroStrategy right here is down 10.75%. So yeah, at some point, I think we're going to see some of this stop because some of these prices are just getting stupid. But the question is when, right? And when does enough money come in to say, all right, these are absolutely stupid prices? Now, granted, if you really think 2025 is going to be a 2022 type of year, these prices are not stupid. These prices are going to get a lot worse. I don't think we're there yet to assume we're 2022. If you do, then you probably sell everything right now and you go to cash. I really don't think that we're there. I think this is just the nature of the volatility we're having because of what's going on with tariffs. Fear and greed right here at extreme fear at 17. But that's kind of what the market's pricing in right now. That things are aggressive. Also, yeah, we have tax season as well. Yeah. I mean, that's another thing, dude. People got to sell to pay their taxes. That's one thing that is definitely going to create some more sell-side pressure on the broader market. People have to take profits, even if they have to take some losses to pay their taxes. That's what's going to happen. And I don't think we see that much of a rebound until after that tax season as well. When should be the bounce situation? I think a bounce happens, I think there's a lot of ways a bounce happens, but the real way I think a bounce happens is if Trump stops talking about tariffs and we negotiate some deals with China, Canada, and Mexico, hopefully in the next 2 months, and we're done with tariffs. And tariffs was just this like bargaining chip to be able to get better deals. If we actually implement the tariffs for the long term, meaning for the next 4 years, I don't know. I don't know how the market's going to react to that. I really don't. Because we're going to get some higher inflation. We're going to get lower growth, right? Unless they just get so many companies to come back to the United States, which maybe it happens, maybe it doesn't. Like there could be some good effects of it, but I think there's going to be some short-term, pretty nasty effects. Look at Reddit, down 7%. Dude, Reddit was at 220 a month ago. Now it's at 123. So like I think the bounce happens if we negotiate a deal, the deal's announced, and there's no more tariff volatility. Until then, I don't know. Or if we get rate cuts, yeah, but like, again, we got to avoid the recession to get the rate cuts. The rate cuts are only good, which is the nuance to this whole theory. Costco, by the way, down 3%. The nuance to this theory about Trump wanting to tank the market to get rates to come down, the nuance is we need to avoid a recession if that is the game that he's playing. And if we don't avoid the recession, we kind of don't really get the momentum that he's expecting. And so we need to make sure that in the face of slower growth, the Fed cuts before we get the recession, which is historically not what they've been able to do, right? Like you talk about timing the market, the Fed has been horrible with their timing. The Fed needs to be able to time it almost perfectly here to get rates to come down so that we get a pseudo recession, but it's not a horrible recession, and the rates serve as a cushion. The rate cuts are a cushion to the slowing growth. And then as a result, as those cuts get factored in, you can start to get some more stimulus with quantitative easing. But it's a dangerous game to play with tariff volatility being the overhang across everything. And I don't know how that's going to play out. What do you think about CPI? I think the projections on CPI is that it's going to be flat from what I'm seeing. We'll get more data tomorrow, but the projections on CPI, NVIDIA right here, 110, is that it's going to be flat year over year, which is good. It's better than going up year over year. So I think it would come in at 2.9%. Again, it was at 2.9% last quarter. As long as we are not last quarter, last month, as long as we hold on to 2.9, I think that's good. I don't think we're going to 2.8. I don't think we're going to 3%. So hopefully, we stay flat. Trueflation has us at 1.4%. Again, I think Trueflation is accurate about that, but the problem is the Fed's not looking at Trueflation. They're looking at their antiquated metrics of inflation. And until it catches up to what the real-time aggregated sources of data show, the Fed's going to be behind. And it seems like the Fed continuously wants to stay behind at this point. Can hood metrics make it bounce? No. I don't think any earnings or metrics, which we're going to get metrics tomorrow for hood, are going to make this thing bounce. Hood, again, is a proxy on the market. If the market's down, hood is down. I've been in hood for almost 3 years now. I've been studying the company aggressively for 3 years. Like, this is my conclusion after looking at all the historical price movements against their earnings growth. Like, if the market tanks, hood tanks. And that's okay, because I think hood is a long-term, incredibly strong financial institution that's going to be one of the biggest companies in the world when it comes to finance. So cheaper prices for the long term is better. But if you're expecting this thing to go from 30 to 50 that quickly because of short-term metrics, I don't think that's going to happen. If the market continues to be in a prolonged state of downturn. Same thing with Bitcoin, right? If Bitcoin bounces to 100K, yeah, that could help hood, but Bitcoin's not going to bounce to 100K if the NASDAQ is flat. Like, all of this stuff is connected, right? So that's what I'm saying. I think the only way Tesla now 243, low of the day, I think the only thing that resolves the pain we're seeing, which creates a legitimate bounce, is a tariff deal is reached. Because at this point, people are not going to step in and just buy the dip. CrowdStrike right here down 5% as well. Like Robinhood at 39 is stupid, but no one's going to down 10%. No one's going to step in and just buy that dip. People are going to step in when they have a catalyst from a macro perspective that says things are clear for the future. And right now, nothing's clear for the future because Trump's going to talk more about tariffs probably in a couple hours, put out some tweet about tariffs, and then boom, like, you've got more volatility. Same thing with the HIMs. Like, although I don't own HIMs, I've looked at their growth. HIM should not be $35, bro. HIM should be much higher than 35. Maybe it doesn't have to go to 72, but like, the numbers they just put up are just ridiculous for the level that they're trading at. But like, no one's going to buy it if they don't think that overall volatility is going to decrease. And right now, overall volatility is obviously very aggressive right here. CrowdStrike down 5.6%. This bad boy came from 450 down to 314. So we're seeing a lot of these growth stocks continue to get hit pretty aggressively. No one is going to trust that tariffs are done just because a deal is announced. That's fair. That's also, I mean, that goes to the point of the volatility that we're experiencing, right? No one trusts anything that the administration says because they keep flip-flopping until we get some actual evidence that we're going to meaningfully get a end to the tariff war back and forth. We're not going to trust it. Speaking of tariffs, let's get an update on what China is doing with their retaliatory tariffs, and then we'll keep going from there.
Moment ago, let's talk some China. Retaliatory tariffs against the U.S. are now in effect. Our Eunice Yoon is in Beijing this morning with the latest. Hi, Eunice.
Hey guys, well, Chinese stock prices tumbled, and this is because investors have been bracing for more tariff uncertainty. Today, the tariffs, the 10 to 15% tariffs that China kicked into place are going into effect or are in effect. And these are on American farm and food products covering $22 billion worth of goods. China's countermeasures also included the suspension of American timber. So last year, American exporters shipped $850 million worth of timber to China last year. The focus here in China now is how this trade war could affect the Chinese economy. We heard some negative news over the weekend. The economy is still showing signs of weakness. The consumer prices for February dropped at its fastest pace in 13 months. This reversed an increase and also missed expectations. At the ongoing National People's Congress, policymakers have been indicating that they are looking to prepare for a trade war, especially when it comes to food. The authorities here raised the grain output target for the year, as well as the budget target for stockpiling it. And that suggests that the authorities here want to make sure that the country has enough food and that the food prices are stabilized. Now, meanwhile, Chinese exporters, as well as their U.S. counterparts, are trying to figure out who pays for all the tariffs. For example, I spoke to two suppliers who said that their customer, Walmart, has been putting more pressure on them to take on all the costs. And they've been telling me that it's just so difficult, if not impossible, for them to take on a now 20% tariff. They said this is on top of the Trump 1.0 tariffs. And then one of them, at least, is eyeing on Wednesday the steel and aluminum tariffs, which would be coming in at 25%, and saying that all of this is just causing them a whole lot of whiplash. Guys?
Okay, so that, I mean, the fact that they're, the fact that Walmart's trying to figure out who's going to pay for the tariffs just shows you how aggressive this tariff thesis has been playing out on United States companies. We are getting some nasty red, folks. We are violating all of the lows we hit about 30 minutes ago. S&P 500 looks like it's about to go to 565. AMD's down 1%. NVIDIA, 108. 3.55% down. Robinhood looks like it's about to hit $38 at $39.20, down 11%. CrowdStrike's down 7%. Palantir's down 7%. 78.96. Grab is down 7%. Walmart's down 4%. Google down 4%. Tessie is 80 cents away from 239, down 8.2%. MicroStrategy down 12%. Oracle down 4%. They have earnings today. CleanSpark down 8%. SoFi down 5.7%. Is it too early to say Black Monday? Is it? Oh my gosh. This is all right, let's do a fun game. Put one word in the chat to describe how you're feeling right now. One word, not two, one word. Think carefully about it. What is the one word? Don't just say the F word, because I know that's what everyone wants to say. But what is the one? All I'm seeing is the F word. Dude, YouTube's gonna ban us. YouTube's gonna be like, his chat is too mean. Oh my gosh, dude. Yeah, S&P 565. There you go. Someone said horny. What is I guess some of these prices could make you feel like that. Gravity, that's a good one. I like that one. Bargain, I don't hate that one either. We got that's optimistic. There you go. Pissed, okay, I understand that. I think that's a lot of us. Nauseous, that is fair. Trash, that is fair. Buy. That is, I mean, look, at the end of the day, bro, for anyone who's not clear about my position, I'm not selling out of this market. Just to make it very clear to everybody. I am probably going to be buying into this pain. Granted, the only reason that even on Friday, right, I bought like 5 shares of NVIDIA, 5 shares of Hood. I didn't go aggressive is because still this tariff volatility is a concern. And I think if you're going to buy in DCA, that's fine. I don't think you need to necessarily DCA all of the available cash you have at these bargain prices, because some of these are bargain prices in my opinion, but the market can go much lower if Trump continues to institute whatever policies that he wants to go down with, right? So obviously things can still get worse, but I still think it's a DCA because some of these prices at this point are becoming stupid, even though the overhang of tariffs can make them much worse. Pain, resilient, despair. Despair. I see a lot of despair is violated. F around and find out. Yeah, that's another one. Stoic. That's a good one. You kind of got to be stoic at a point like this. Opportunistic, annihilated, circumcised. Shopping. All right. So I'd say 50% of you are like finding a bullish word. The other 50% are pretty upset about this. Look, it's bad. It's aggressive. It's bad. S&P 500 now year to date, even though from the top it's down almost 8%. Year to date, we are down 3.4%. So still not down 5%, which officially qualifies as a pullback, and then 10% is a correction from a year-to-date perspective. But from all-time highs, we are down about 8.2% right here. Palantir 79.62, getting a little bit of a green candle. NVIDIA 108.50 to 109. I don't even know if we want to say that's a green candle, but it is somewhat of a candle that is at least not red. But the rest of the market obviously still getting hit. Celsius is up 5%. No one gave me a theory yet for why Celsius should be up. But Celsius is up. And I guess Celsius will continue to be up while, while everything else gets hit. ALF is up 6%. Yeah, ALF and Celsius. Margin call. That's a good word. Put those two words together. Oh my gosh. Someone said Pepsi acquisition news. Yeah, I mean, they did have one of the Pepsi executives joined Celsius's board. I think that news came out on March 4th. But still, dude, Celsius is a growth stock. You would think it gets violated like most growth stocks are, but it's not. Why is Grab getting violated like this? To me, this is all algos at this point. Grab at 420 is absolutely ridiculous. It makes no sense. And, you know, we can go through the numbers for the next 5 hours. It makes no sense being at these levels. So to me, this is everything that's being taken down. International stocks are being taken down along with domestic stocks. Nubank right here at 1047, that's down 3%. Even though the dollar is down, and that's good for Nubank, Mercado Libre, and Grab on their earnings when they report. It'll be good for their earnings, but it's not good, like just in general, for the dollar to be down. That's not going to help them. If the dollar is down because the economy is weakening, then everything's going to fall, right? So I can understand why those stocks get hit, even if they don't deserve to get hit. But on their earnings, at least, because they're not going to have to report in constant currency that is aggressive against their own currency because the dollar will be down. That'll be good for when they report in a couple months. But in the meantime, yeah, the algos will definitely continue to take them down from here. Yeah, X is down, dude. For some of you guys in Europe, X is fine. Some of you guys in the UK, X is fine. At least in the States, the servers on X are not working. If X is working for you, let me know in the chat, but it's not working for me. And I think a lot of people in the United States, it's not working for. It's down in Portugal as well. Okay. So in Germany as well. All right. So that's in Switzerland. Wow. Okay. So across the entire world. I wonder what's happening there. I wonder if that's a DDoS attack. I wonder if it's Elon didn't pay the bills on the servers, or it's working in Israel. It's not working in Singapore. It's down in France. It's down in Spain. It's working in Canada. Okay, so some parts of the world it's working, some parts it's not. Down in Australia as well. Zocold's in California. That's weird. So it's working in it is where a bunch of you guys are saying it's working in California. Weird. Yeah, something's going on. That's weird. Doug says it smells like an attack on X. The website works, so it's not DDoS, just the messaging. Yeah, and also I don't think it's a server issue if it's working in some places, not working in other places. Because wouldn't it be down across the board, at least in the same country? Like, why is it working in California but not New York? Unless there's separate servers for the New York X and California X, which there might be. So that could be a reason. Well, that's weird. I guess we'll find out hopefully soon if it gets back to normal. Oh, you're in Hawaii right now? Oh, okay. So I guess it's working in Hawaii. It's down in Japan. Dude, did you guys know the highest population of users on X is Japan? They have like 100 million people from Japan that use X every single month. It's not even the United States, it's Japan. The Japanese use X like that's their go-to app for content, messaging, etc. So Japan has a really big relationship with X. They have a lot of advertising down there as well. So if it's not working in Japan, I mean, we got some issues, bro. That's like one of their biggest markets. Palantir continues to fall, down 6%. S&P is down 1%. Nvidia is down 3%. Let's see what the suits are saying about this decline, how they're making sense of it. I think everyone's reasoning is going to go back to tariff volatility, dude. I think everyone's reasoning comes back down to tariff volatility continuing to create some fear in this market. All right, here we go.
Of the year that the Magnificent Seven, or let's just call the top 10 stocks in terms of market cap, and the S&P 500, the growth was beginning to go to decelerate. We knew that, but we've also not looked at how we've seen a massive acceleration from the 493 others. That's kind of number one. Number two, coming into the end of the year, we always see this big revision, especially after first quarter, down to the downside. So some of this is seasonality. Number three, in terms of what we've seen with respect to the market, I could claim to you that the momentum trade now is into defensive names like utilities and staples. From a fundamental perspective, if you take a look at valuations and debt to equity and free cash flow, consumer staples and utilities are very expensive and don't see a lot of fundamental growth from our side. Again, it's more stock picking, Mike. But I think in terms of earnings, you're going to see more of a settle down. I think, quite frankly, it's more about the discernibility and sustainability of earnings than it is these projections. So the more stable the earnings growth, the better.
So given that perspective, Brian, I'm just curious if you think the emotion at this point has been effectively washed out. Are we close to the end of this unwind that we're seeing?
Well, again, talking about the great Mark Haynes and the washout low of March, we would love to have this perfect little sell-off that signaled everything. I think what we've learned the last few years, quite frankly, is that you never see exactly what you want to see in terms of this great sell-off. And I think when you talk about positioning going forward, Leslie, you want to understand that the stock market is a market of stocks. I think so many people in the strategist game want to make the big market call. So this is the low, or we're going to go to here. Guess what? You want to maintain that the U.S. stock market, in our view, from a longer-term perspective, is the best market in the world, period. It has the best stocks in the world, best companies in the world. So you make your list now. You look at what's happening in terms of these great financial names like Citigroup and Bank of America and JP Morgan. You haven't heard anything in terms of the wealth management channel. The wealth management channel is doing amazing. So look at stocks on an individual basis. Start your shopping list. Stop trying to time the market and be a long-term investor.
Brian, good message. Appreciate it today after a couple of challenging weeks. We'll talk soon. Brian Belsky.
All right. So, I mean, their argument is the same argument that I think most people are making, which is that you buy this dip, even though it keeps dipping. Robinhood, 12.6% down. NVIDIA, down 3.3%. CrowdStrike, down 7%. I mean, this is a nasty Monday, folks. Nasty. Tesla, again, it's like it was 29 cents away from going below 240. It looks like it wants to get there. It's trying to bounce from 240, but doesn't look that strong. It's getting hit. It's getting hit pretty damn bad right now. Celsius, again, still up. Is losing some of its momentum, but it's still up. Enphase up 4%. Redfin up 72%. That's getting an acquisition. Then Elf right here is up 4% as well. Oracle has earnings today, which is going to be important because I know the whole Stargate thing is going to be something they get asked about a lot. It's a crappy data report, but they're down 4%. And then SoFi right here, 1180. That's down 6 points. Where's Rocket Lab? Hold on. We didn't even look at Rocket Lab. All right, I'm going to say Rocket Lab 1650. 1750. Okay, not that bad. At least it's not back to that earnings low. 1760, still down 6.2%. here right now. We want to do year-to-dates? All right, everyone do year-to-dates. What are your year-to-dates now? My year-to-date is 9.23%. Negative 9.23%. That is my year-to-date. You guys can put it in the chat. I mean, look, if you're still positive year-to-date, congrats, but I would say the majority of us are definitely officially red year-to-date. Let's not do that. Yeah, I'm seeing a lot of negatives. -15, -8, -6, -20, -11. Matt's up 35%. I know Matt had some puts on the market, so that's probably why that's helping. -60, -7. Yeah, I would imagine most people are negative right here. We're going to see how much more negative this thing can get, but obviously this is a nasty, nasty hit. And it is flipping most people's portfolios down to the negative side. S&P 566 holding on to the level, still below the 200-day. Grab down 8%, Nubank down 3%, Rocket Lab down 7%, and then Robinhood bounced off 38, but I don't trust it actually holding above 38. That one looks like it, continues to want to get hit. Where's the VIX right here? The VIX should be up like 10% today, right? Or close to it. Yeah, VIX is up 13%. Calls on the VIX have been amazing this year if you played it with the right timing, or even if you just bought the VIX in and of itself. On days like this is when those things can flip very nicely. One piece of news right here. This might be interesting, might not be interesting, but Bank of America came out with a report this morning, and they expect humanoid robots to hit 1 million per year by 2030, with 3 billion in operation by 2060. They expect costs to drop from 35,000 to 17,000 by 2030, and by 2060, 65% of humanoid robots will be in homes, 32% in services, and 3% in industry. Their report was titled "The Era of Humanoid Robots is Coming." This is bullish for something like a Tesla. It's just, right now, humanoid robots are still in theory. They haven't been practically applied in the real world yet. And so in the face of all this market volatility, no one really cares about robots if Tesla continues to get hit. Bitcoin, there she goes, below 80. Below 80. There she goes. Down below. Trump is speaking at 2 p.m. today. 2 p.m. I think it's going to be live, that council with the tech CEOs. It might not be live. It might just be a photo op. But that'll be at 2 p.m. Eastern today. There she goes, 79.5 on Bitcoin. 79.5 on Bitcoin. Okay, here's a question for everyone. Who thinks the strategic Bitcoin reserve was what they expected to see? Like, who thinks they got what they wanted out of the strategic Bitcoin reserve announcement? And to clarify, the announcement was a executive order to audit the amount of Bitcoin we have, commit to not selling any of the Bitcoin, and then create a digital Fort Knox of quote unquote digital gold, which is what they're referring to as Bitcoin, and then to create a stockpile of that Bitcoin. Was that enough for most people or no? Okay, yeah, most of you guys are saying it's a flop. That's what I thought, dude. I thought it was a flop as well. I thought it was just, don't get me wrong, it was a good thing. Like the fact that the White House, invited Michael Saylor and Coinbase and had all these professional Bitcoin OGs like talking about, like, all that's good, all that's bullish. Obviously, that's way better than what a lot of other administrations would have done or historically have done. But it just is not what people wanted. People wanted to know how much Bitcoin. Even if they came out and said, we're buying 10,000 Bitcoin, it doesn't have to be 100,000, it doesn't have to be 1 million, but it just has to be something where they're announcing that they're going to bid on Bitcoin. They didn't do that. Now, granted, some people are saying they want Bitcoin to crash to then buy it at an appropriate level, right? If Bitcoin gets back down to 60K, then Trump might be more excited to buy Bitcoin versus buying it at 90K, which is a fair, argument. But the fact that there was no real announcement on how much or when they're going to buy Bitcoin, Tesla right here, 15 cents away from 240. There you go, 239 on Tesla, officially below 240. The fact that that announcement wasn't made, I think, is what people are pissed off about when it comes to the reserve. And I think that's what they're seeing right now. Thomas says they delivered exactly what they promised at the Bitcoin convention. Well, maybe I didn't hear them correctly, but I heard they were going to come up with a plan to buy Bitcoin. Maybe I heard the wrong thing, But from the OG crypto people that I talked to a guy over the weekend who bought Bitcoin at $1. And I cannot tell you how pissed off he is at around what the Trump administration is doing with crypto. First of all, he is extremely mad that Eric Trump is tweeting buy the dip and basically engaging in insider trading, which is what it's doing. I mean, the fact that Trump's kids are saying buy the dip, like it's absolute grift. It's a grift. It's insider trading. I don't think everyone has to be objective enough to realize that it is horrendous that the president of the United States is launching a meme coin. Like, it's ridiculous, dude. It's insane. Like, I think everyone, even if you're a Trump fan, can admit it's insane. That was the first thing he was upset about. The second thing he was upset about is this smoke and mirrors Bitcoin reserve executive order that doesn't actually explain how they're going to buy more Bitcoin. And so when you have OG crypto people saying this is a load of shit, it starts to feel like, yeah, it's all nonsense. A lot of it is all nonsense. But again, maybe this is not the right time to buy Bitcoin. I mean, maybe if we're going through a little bit of a tumble in the market, or a lot of a tumble in the market, you can get Bitcoin at a much better price, and they'll come out with an argument to buy Bitcoin when it's at 60,000. So, but I think whether or not they deploy the capital to buy at these prices, I think people wanted a plan. And quite frankly, I don't think they have a plan on how to buy. They don't know where they're going to get the money from. And maybe people should have had that in their expectations. Maybe people should have known when they voted for Trump there was going to be no plan on how to actually buy it. And everyone had two false expectations, including myself. But I think that's the reality of what we're dealing with right now. S&P 500 almost down 2% on the day, officially. 1.77% currently right now. Tom Lee still believes there may be a gap down to 68 on Bitcoin prior to the run-up. Yeah, so Tom Lee's in the camp that we're probably heading to 60 before we head to 250. Which is what he said a couple months ago, which would make sense, right? I mean, that would be typical Bitcoin, that you take a really nasty decline and then you climb back up. And maybe that's when the administration comes out with their plan to buy Bitcoin, when it's like a lot cheaper than 80,000, which would actually be kind of smart. It's just the question of when and if that's going to play out. Tesla 239. So here's the question. Who's buying the Tesla dip? Who's buying the Tesla dip? Who's touching Tesla right here? Man, oh man, is it scary to buy the Tesla dip, because, there's a billion bullish reasons to get excited for Tesla, but there's also like this brand damage is like happening. I don't think anyone can deny it. Do I think it's going to outweigh FSD robotics long-term? No, but there's some there's some pain in terms of what's going on with the brand. Even Elon acknowledged it over the weekend, that the brand damage is getting bad, and he was thanking everyone for sticking by and supporting Tesla. And then just like Q1 automotive sales, I don't think are going to be good. I really don't. And so if you're buying it because you think it's cheap, the auto business, if that's all it's valued at in April when they report, I don't know. Maybe it doesn't end up getting that cheap. But we are seeing some pain right here in the context of Tesla. How crazy would it be if Tesla gets to freaking below 200 again, dude? How crazy would that be? Like it hit 100 in freaking January 2023, and then it got all the way back to 487 2 years later, after falling from 400 to 100. And then if it goes back below 200, which, I mean, look, this price action is not encouraging at all. I mean, it would just be a wild ride, an absolute wild ride over the past 5 years of holding the stock. I mean, really over the past 3 years, you've kind of been, break even, if that. Tesla right here, 241, down 8.2%. So it bounced off 238.89. So it went about $2 below 240. We'll see if it can hold these levels. The brand damage on Tesla, again, we talked about it last night. I showed a couple of clips. There are some theories out there that there are groups that are funding people to get more aggressive about Tesla and explain how much they hate Tesla. Yeah, Twitter's working out for those that are reloading. It looks like it's working. This was a real post on Kia's Instagram. They tweeted a picture with the sticker, "I bought this after Elon went crazy." People were getting mad at Kia for doing this. I mean, in my opinion, this is kind of smart for Kia. Like, do I agree with it? No. But like, business is ruthless, right? And it's like, if I'm Kia and I'm playing to a base of people that hate Elon, like, why wouldn't I tweet that, to be honest? I mean, like to be honest, it's smart marketing on their part. I don't agree with it as someone who, relatively is against this type of thing. But if you're playing the business wars when it comes to marketing, I mean, like, You had people that were upset you had a lot of Tesla people that were upset. I'm like, I get you're in love with Tesla and you're upset about this, but if you think about it from Kia's perspective, like this is actually a great way for them to market, to paint Elon as crazy. And so I think other companies are taking advantage of it. And then you got this thing going on right here. This random dude in New York City is chasing down a Cybertruck and pounding it. See, this to me is stupid. This to me, if you are this bored with your life to put up a middle finger against someone who's just driving a Cybertruck, this to me is insanity. This is people that are losing their minds. That's my personal opinion. You can agree or disagree with it, but I think these are people that are like just losing their minds to actually go through that. Ironically, there's a cop car right there, and the cop didn't do anything. But like, this is insane, bro. Like, you can't have a society where people are doing this shit. You just can't have that happen, no matter how much you think Elon and Tesla is whatever, right? But like, the point is, it's happening. And as an investor, whatever your opinion on it is on it, good or bad, it is happening, and it's something that the brand has to take into account in terms of the implications of this type of stuff. And it's getting pretty aggressive right now, dude. I mean, I'm just waiting for the day that my Tesla gets damaged, because at this point, I don't know. I'm in New Jersey. New Jersey is liberal, but New Jersey was 5% away from going red. So it's getting a bit more conservative. I'm not literally in New York, where New York is much more liberal than New Jersey. So I don't know. I hope no one spray paints my Tesla. But at this point, I'm just getting ready to expect coming out of a store and then seeing my Tesla vandalized, because it is what it is, right? You're seeing all these things happen across the world. Who knows if it could happen to you? So the brand damage is happening. I don't think long-term it's going to destroy Tesla, but short-term, yeah, it's creating volatility. And it's creating some aggressive volatility. Matt Money says South Jersey is very red. That's where my houses are. First of all, I love the subtle flex by Matt Money saying that's where his house is, with an S, is in South Jersey. But yeah, South Jersey is very red. Like, New Jersey ends up going blue, and we've gone blue since 1992. But South Jersey, like you talk about Atlantic City by the shore, they did not vote for Biden, and they did not vote for Harris. They are full on Trump. It's the northern parts of Jersey that are very close to New York that end up carrying most of the state's votes, which allow it to end up going blue. Same thing with New York, bro. I mean, New York was getting closer to red this time. It didn't end up going red. It wasn't within 5%. New Jersey was very close, within 5%, but there are parts of New York that are very red. Albany, Buffalo, upstate New York. It's just the city. Yeah, the city is very, very liberal. And that one's probably never going to go red. Did we have some macro data today around consumers? Did we have some? I think we did. Did we? Consumer confidence. Did we today? Today's what, Monday, March 10th? No, we didn't. We have the Treasury bill auction at 10:30 today, the 3-month and the 6-month bill. Yeah, that's it. Yeah, we don't have any. Okay. So tomorrow's going to be the important one. Tomorrow is Jolts. That's going to be the important one. Peter, thank you for the $1.99 super chat. Next Tesla vote, do you think Elon gets voted out? It's an interesting question. I'll tell you, if my dad has a vote, he's going to vote him out. My dad is so upset. My dad is wondering why Elon's even this. Because again, you gotta remember, my dad, he's 63. He's not going to get as nuanced into all the stories of understanding what's going on with Tesla. He thinks of life very simply. He goes to work, he gets paid for going to work, he comes home, he eats, he goes to sleep. He sees Elon at the White House all day, and then he thinks of his capital invested in a car company. And he sees all these headlines on Facebook, because he scrolls Facebook all day. And he's like, he comes home, he's like, why isn't he at Tesla? And I'm like, well, and he's like, no, this is stupid. Like, why is he not working at Tesla? He's the CEO of Tesla. And I'm like, yeah, but he's trying to save the country. He's like, I don't care. Why is he not? So I think for a lot of people like him, he's ready to vote him out. He doesn't care about Elon. He doesn't know what Elon's done for the company. He's just annoyed that the dude's not at his job and he's, working at it. So the point is, to your question, will Elon get voted out? I don't think that'll ever happen, because I think, Tesla shareholder base is too loyal to Elon. I would still vote for Elon. I would sell my shares immediately if Elon steps down. I'll tell you that. If Elon's not the CEO, I'm out. Maybe my dad's in, but I'm out. I'm like, I'm part of my thesis on Tesla is Elon. And I know the whole year, that thesis has gone the opposite direction given all the work he's been doing in the White House, but still, I don't trust anyone to run Tesla over Elon. And people may disagree with that, but the point is, I think he's going to continue to get compensated. He's going to continue to get voted in. I think Tesla would have to get to such an egregious price that even the long-term investors that believe in Elon switch on him. And I don't know. I don't know what price that is. I feel like it would have to be below 100 to really get people to get upset. But I don't know. I don't know. I personally wouldn't be interested in the story if Elon's gone. Like and I know that's counterintuitive, but I still believe in Elon as a visionary here. You know what I was thinking about yesterday? I wonder if he's going to be on the earnings call. I really wonder if Q1 is he going to be on the earnings call? SoFi right here down about 7% as well. Like because if he's so busy and he's not there day to day, why would he even come to the earnings? Was my first thought. When I was wondering, when Tesla's earnings are coming up. I mean, like theoretically, he should just let them do the earnings. So I think it would be pretty bad if he doesn't do the earnings, but I could see it logically happening where he doesn't show up. And if he doesn't show up to earnings, I think people would get really upset as well. I think people would get really, really upset. So we're going to have to see how this ends up playing out. Okay, let's hear from one of the guys we heard on Friday. This is Kevin Hassett, who's the National Economics Council Director. Obviously, markets are getting hit. Let's see what his interpretation is as a representation of the White House for why we should still be bullish on this economy.
Be like a metric of the inheritance of President Biden. A lot of that is also from a big increase in the trade deficit, which, as you know, and you've been covering, Joe, is happening in part because people are anxious about future tariffs. And so they're stockpiling. And so that's a very, very temporary phenomenon. I think that medium term, what you're seeing is the biggest tax cuts in history, a massive deregulation, a productivity boom from artificial intelligence, and tariffs, which even if you take the high end estimates of the tariff revenue, they're going to be just a tiny fraction of the size of the tax cuts, which are almost surely going to be in place by the summer. So if you're thinking about like what's going to happen to capital formation in the US, if you take our cost of capital measures, it goes up 10, 11% over the next year. There are a lot of reasons to be extremely bullish about the economy going forward. But for sure, this quarter, there are some blips in the data, including the negative GDP now, which are related both to the Biden inheritance and to some timing effects that are happening ahead of tariffs.
The main criticism, I think, even among financial types of the Biden administration was the inflation. Even people that didn't like the Biden administration have to acknowledge that the jobs picture was strong through most of the Biden administration, and the GDP numbers were strong. Maybe it was Keynesian. Maybe there's something comes home to roost from all that spending. Maybe that's what you're talking about. But you don't consider any of the current possibility of a softening economy. You don't think it has to do with the uncertainty of you don't think Trump owns any of that? I think, even someone that was right in the middle would not immediately attribute the soft. I'm seeing it on Twitter constantly. How's this guy doing now? How's that feel? How's winning feel with the economy? And they're not tying it to Biden, Kevin. They're tying it to some of the uncertainty from the Trump administration.
Well, let's be clear, though, Joe, that last year, the Biden numbers, we kept getting these great jobs numbers. And then by the end of the year,
markets just hit a new low, folks. 564 on the S&P, officially down 2% on the day. Robin at 37, NVIDIA 107, CrowdStrike 307, Palantir 78, Bitcoin 79.6. We just hit a new low for the day on the broader markets.
We see that they're revised down by a whole million. And so a lot of the numbers that looked kind of good at the advanced release weren't good in retrospect.
Well, they're still pretty good. And that was a technical thing.
No,
and
even then, technical, million jobs is more than a technical thing. But the thing that I would say is that uncertainty, I have a paper that Matt Jensen and I wrote, we published a while ago, on the impact of uncertainty on the economy. And basically what happens is when there's a lot of uncertainty, people who have big projects, like you got to nail down a new factory or something, tend to wait for the uncertainty to be resolved. But what I'm seeing in the jobs number, for example, is that the uncertainty is actually creating jobs in the U.S. Right now, we just saw 10,000 manufacturing jobs created in the U.S., 9,000 auto jobs, and that's after losing 110,000 manufacturing last year. And so what's going on with the trade policy, which is a small fraction of the overall policy, is that it's starting to have the intended effect of onshoring activity in the U.S. Now, people talk about the prices. What about the price of this, the price of that? Don't forget that when you increase labor demand in the U.S., you increase wages. Do you think, Joe, that real wages are going to be higher a year from now after we have the tax cuts and some tariff policy and deregulation and AI? Are real wages going to be higher? Well, yes, of course they are. So therefore, the welfare of Americans will be better off. And real wages decline for 3 of the 4 years under Joe Biden. And so I'm very optimistic about the economy, but I'm also mindful of the GDP down number, which is a very, very temporary phenomenon.
So the same analysis from a lot of the Trump people, as always, which is that this is short-term pain for long-term gain. That's essentially what he's saying. I don't know how long the American people are going to put up with that narrative, but that is the narrative they're going with. Short-term pain for long-term gain. The 10-year is down, but not down a ton. At least it's not up right now. I know a lot of people think TLT is the trade to hide in. I mean, it's all contingent on the 10-year actually coming down. So TLT seems to be a very crowded trade right now, and everyone's expecting the 10-year to collapse. Trump, Besant, Howard Lutnick, these guys are definitely expecting this 10-year to collapse. I think that is what they're trying to do, which means, yeah, TLT would be the move there. But you gotta hope that Trump is right on that thesis and that the 10-year actually does collapse. Otherwise, TLT is not going to be the right hedge. So I'm seeing a lot of people think TLT is the safe spot right now. Maybe. I think it was safer when it was back at 84. That's when no one wanted it, and rates were at about 4.8%. Now it's at 4.2, and we're at 91. So, yeah, I don't think TLT is horrible, but you just got to hope that Trump actually gets this 10-year to come down. And if not, then TLT is not going to be at least the safe play right here. Toby says they're not expecting their engineering it. Yeah, I agree. I think, and if you bet on TLT, you're kind of betting that their engineering will be successful in terms of getting the 10-year to come down. Robinhood right here down 14% on the day, 38.33. NVIDIA as well. It looks like NVIDIA wants to just go below 100, and it's kind of sympathetically staying above 100, but it looks like that one wants to get hit. S&P 500, slight little green candle from 564, but we are still down 1.86% on the day. 565 here on the S&P. Define short-term. I would say short-term is like, I don't know, 3 months. I would say by summer, it's going to be very interesting if this method of trying to get rates to crash and like creating volatility in the markets, having all this tariff language still lasts. You know, maybe it takes till the end of the year for whatever deal they're trying to get done with tariffs to get done. I think hopefully it would be less than a year. But if they go the whole year, the next 9 months of just pure volatility based on conflicting tariff news every other day, yeah, I mean, the markets are going to get hit, right? If this is another 3 to 4 months of pain and then you kind of get a rebound, maybe you see some momentum, especially if earnings growth is good, inflation comes down, the labor market stays tight, all that stuff, like, which are 3 pieces of macro news that we have going for us in the right direction, at least for now. But this tariff volatility it's an overhang on the market. And I don't know if that overhang is going away anytime soon. Powell's not speaking today. Powell's not speaking. He spoke on Friday. There's going to be no Fed talk this whole week. We're going to get CPI, we're going to get PPI, we're going to get JOLTS data, but there's no Fed talk this whole week. I think next week is when we get more Fed talk. But this week we get none of it. When is the next Fed announcement? I think March 19th, right? Yeah, so that's why they're not talking this week, because they don't talk the week before the FOMC meeting. But March 19th, where are we at right now? Yeah, March 19th. Right now, there's a 97% chance the Fed pauses, which I agree with. There's not enough of a reason for them to cut yet. Maybe is a different question, but March is not going to be easy to get a cut from. Alpha is up 9.3%, dude. I still don't get, why is the market rotating into ELF, Celsius, and Enphase? Like, I don't get it. I really don't. I don't, like, even if you want to say ELF got oversold or whatever, like, sure, but like, ELF is still a growth stock. It's not a value play. It's not a dividend. Like it's supposed to grow, unless it's this whole makeup recession thesis. which maybe that's the argument. Gotta look good in a recession. Yeah, I guess so. But like this is very weird. I don't get it. I don't get sell. I really don't get end phase with oil prices coming down. Like I really don't get that one either. So and those are like the only three that are red. Like Nike's a little red. Ulta Beauty is a little red. Estee Lauder is red. So Estee Lauder, Ulta, and Elf. I guess the makeup recession theory maybe has some legs behind it. Everything else, Palo Alto is down 4%, DraftKings down 6%, Rocket Companies down 14% because they're making that acquisition today. Rocket Lab down 7%, NVIDIA 107, S&P 564, AMD 98. All the cryptos are getting hit. MicroStrategy down 11, Marathon down 12, Riot down 6, CleanSpark down 7, Coinbase down 10. Coinbase now below 200. Ethereum went below 2,000 yesterday. Bitcoin just below 80,000. But all of these are getting hit as well. And then all the semis continue to get hit. Yes, it's Estee Lauder. For those that don't know how to say it, it's Estee Lauder. I know sometimes it's hard for you guys to pronounce the names of some of these companies, and I have to help you guys with it. But yeah, it's Estee Lauder. Visa's a little red. Is Visa red? Visa, yeah, that one's actually relatively flat. American Express, where's Berkshire? American Express is red. Berkshire has to be red because of Apple. Berkshire, well, only 0.27. It's not the worst red. You got some parts of the value in Berkshire holding it up from the growth declines. But Apple right here. Wow, Apple 4%. Holy crap, dude. Apple falling 4% is worse than the S&P falling 2%. I mean, Apple doesn't fall like that, bro. Apple doesn't get hit that badly. Wow. That is a little aggressive on Apple. Little aggressive right there. Goodness gracious, dude. That's nasty. I think we have an update on Apple. Let me pull this up right here. Damn, 4%, dude. Yeah, if the market's not finding comfort in Apple right now, they're not finding comfort anywhere.
Big Siri update that brings artificial intelligence into Siri, kind of supercharging it, let's call it. And now it's delayed. Apple says it's going to be delayed until the coming year. And this is really going to damage that bull case for the iPhone 16 cycle that said Apple Intelligence is going to force people out there to use these new features and go out there and buy new phones. But to date, so far, before this announcement, just some minor AI features on the iPhone until now. That means some writing tools, the notification summaries you get on your home screen, and of course, back in December, launching that ChatGPT integration with Siri. But this was going to be the big one that could let you control your apps with Siri. It can understand what was on your screen. It could also use your personal information stored on your device to answer questions about your calendar and so forth. And this is all coming as iPhone 16 sales are pretty lackluster. They were slightly down year over year in that first quarter. And then in China, overall sales, not just the iPhone, was down 11%. And Tim Cook told us at the time he partially blamed there was no Apple Intelligence in some of those regions for those sales misses. We're not really going to have more clarity on when to expect this big Siri update, probably until June with that big worldwide developers conference they hold every year down there in Cupertino. And in the meantime, you have AI competitors from OpenAI, Google, Anthropic, Amazon's new Alexa Plus. They keep shipping these new AI advancements constantly while Apple falls further and further behind. By the way, this delay could be pushing back some other new hardware products. Bloomberg reporting over the weekend that smart home device that was going to launch in this spring needed that Siri update to work properly. Now that's delayed as well. And this really pushes that bull case for Apple until the iPhone 17 cycle expected this fall. In the meantime, like you teased, Carl, you have Citi lowering its iPhone estimates, how many phones they think Apple's actually going to be able to sell because of this Siri delay. Leslie, I'll send over to you.
Thank you, Steve. In the meantime, June is a long time to wait for the next update here on this important feature. Appreciate it. Still ahead, Squawk on the Street heads to Houston as the street's biggest.
So Siri not getting the love, obviously, is also another reason why Apple's getting hit. And the broader market's getting hit right now. Apple trading at these multiples is also why we're seeing some pain currently right now. Let's get one of our favorite contributors onto the show, get his thoughts on what's going on right now in the current state of the economy. Chris, good morning. How are you?
I'm good, man. What are you up to?
Well, I'm doing a market open, and we got a lot of people here that are curious on your thoughts on why the markets are tanking. So what do you think?
All right. So first, let's address why end phase is up. I spoke about this when we were on Finance Junkies about 2 years ago. I said it tracks natural gas. Natural gas is up right now. Okay, that's it. So any of the solar stocks, if you ever want to basically have some quick things, if natural gas prices are going up, solar is inverse to that. So what ends up happening, well, solar technically tracks it. So solar goes up as natural gas prices go up, because now what happens is people are going to quote unquote, at least to a like so certain degree, think like, oh, look, we have to use less natural gas, we can use solar as an alternative to generate electricity. So if the prices on natural gas spike, you're going to see the price of solar spike also, which is the panel. So that's why you're seeing Enphase kind of up a little bit. So if you want to track like natural gas, just type up there Henry Hub, and you'll see the spot prices for that. And that's like up a little bit today. So
Kris, it sounds like you just woke up and you didn't really want to wake up today.
well, I mean, what I tend to do is I listen to your morning open and it lulls me to sleep. So, you used to be pretty exciting, and your excitement levels have kind of gone down the last couple of weeks.
That's fair.
Hold on, my dad was calling me. I'll call him back.
Okay, so outside of Enphase, look, another really aggressive day. S&P's down another 2%. When do you think the pain stops?
Whenever the Trump administration decides it has to stop. I mean, this is, in my opinion, this is all they're doing. They're putting on a lot of policies that give little to no confidence to investors, whether that be like individuals like us trying to figure out how to manage all this stuff, or even the biggest hedge funds. Essentially, no one really knows, and so people are just like, oh, you know what? I think it's time to take some money off the table, sitting on the sidelines, wait until something more concrete becomes available, and then go from there. So, but I will say this, in my opinion, I think we're closer towards that bottom when it comes to like the pain points than we are to the top. Now,
Why?
Well, my original thesis, and it hasn't changed, it's pretty simple. Whenever you're dealing with, the situation that we're dealing with right now, it's all about time, right? So there are certain things that you can do in a certain timeline, and then after that, you're basically effed, right? So right now, Trump has to basically get everything that he wants in his policy decision making done within the first 6 months of the administration. Any longer than that, and basically he's risking long-term problems, right? So essentially, if let's say he lets this go on for a year, okay, at that point the midterms are coming and the Democrats will cream him because there's not enough time to recover, right? 6 months, I think, is enough time for him to get all his policy goals achieved, like get the tax cuts, get them through the Congress, right? So that's one thing. Get inflation down as much as possible, so that this way there's like a nice long tailwind of upward movement, not only in the stock market, but in general, like where people actually on Main Street see a recovery. And usually what that means is that interest rates have to be lower. So I think right now the key goal here is, and I don't know if you know this about Scott Bessent, but what made him pretty much famous when it came to George Soros and Stanley Druckenmiller?
He shorted a currency or something?
No. So this was George Soros's biggest thing, but Stanley Druckenmiller was there, and then also Scott Bessent was one of the guys that identified a major flaw that allowed them to make money. So one of the things that happened at the time during the German and UK issue with the currency was that there was an artificial peg that was put in place by the British. So when their currency started to weaken, right? Or I think it was, yeah. So they were basically manipulating the British pound at the time. But one of the things that happened was if you raised the interest rates to basically support the UK dollar, the UK pound at the time, it was linked to the housing market over in the UK. So the problem is there was a huge policy change because Scott Bessent was actually able to identify that, hey, look, if UK homeowners end up getting screwed over with higher interest rates, that will put pressure on the central bank to cut rates.
Right.
Right. So if you remember, I don't know if you know the story behind that, but essentially, housing was his big focus. And I think that was the same back then. And I think it's the same focus right now.
AKA he wants to get the 10-year to come down, to get mortgage rates to come down. And that's where the administration is putting most of their focus on, to unlock economic mobility, not the markets.
Correct. So if you think about it, if 10-year goes down, 30-year mortgages go down, that means now you're going to have a whole bunch of people not only be able to buy homes, but you're also going to have a ton of people who are sitting on homes willing to actually put them on the market.
Right.
And if they put them on the market, that should raise inventory substantially. And if inventory is high, then the price of the homes are going to come down. So if you just minimize this, go to Zillow. And actually, I forgot that we're on StreamYard. I can actually show you this. Damn, I don't have all my data already pre-populated. Let me just get you this thing. Hold on.
I think the broader theory you're making is that, and look, a lot of people hate this theory, bro. I don't know if you've seen the comments on Twitter, but a lot of people hate this argument that we're, I guess, not justifying, but we're making sense of what Trump is doing in order to get rates to come down. What is your response to kind of that feedback that that's just justifying bad behavior by the Trump administration? Or do you think there's actually real logic to tank the markets to get rates to come down, to then get the 10-year to come down?
Just listen to the people, man, like the administration, you know? You don't have to listen to us, just listen to them and what they said. There's going to be disruption. What do you think this is? You know, we need to get the 10-year down. There you go. This is the way
they've quite literally been saying that verbatim, you know?
Yeah.
That's where I come to that theory as well.
It's very literal. Like it's not us trying to make sense of what they're doing. Like they're telling us what they're doing, you know? It's just, I guess it's hard for people to understand why you would want other people to be in a bad position, you know? But it's working. You can see that 10-year coming down. It's like 11, like it's almost down 11 basis points on one day. I mean, there you go. It has to sustain. Now, check this out. If you look at this, you can already see that kind of like rents are already getting to the point where they're more normalized than what it was before. So if you look at year over year rent growth year over year, right? On average, it's actually gone down and it's normalized. Okay. So this bar shows like the left hand, the y-axis. So right here, you can see it kind of flatline and go down this way. So since 2022, average rents haven't really gone up much. Okay. The only thing is the Fed doesn't look at average rents. They look at that weird thing called what is it called? Owner's equivalent rent, which basically is a data point that basically asks like even homeowners, like if you rented this home, how much rent could you get for it, right? And that's one of the things that's keeping OER a little bit high. But I think eventually that data is going to make its way into the ecosystem. So right now, if people were asking me, Kris, when does this end? In my opinion, it's very simple. It's when the data shows the actual impact. So the stock market itself is not the only thing that is the goal right now. I think Trump is actually, I think the what Trump said is correct, which is I really am not looking at the stock market right now, but what he is looking at, and Scott Bessent is looking at, is yield on 10-year. So they have a target for the yield on 10-year. That's the first thing, right? Second, it's going to be looking at different different impacts, like both on the corporate side, like layoff wise. So you're going to be looking at jobs data. You want enough of unemployment to rattle the cage over at the Fed. And this is the last thing. Do you know about SLR?
No.
Highly recommend you look up what SLR is and why that's important for banking. SLR is basically leverage ratios that banks have to secure. So it's basically the amount of like money that banks have to hold on to, and what type of assets that are used to calculate the amount of money that you have to hold on to. So basically, if you look it up, just go to Google, because I don't want to search for it right now. I'm tired. Just go to Google, type in Jerome Powell SLR ratios. There's legislation in the works to allow banks, especially the big banks, to hold more treasuries on their balance sheet, and it won't basically negatively impact their SLR ratio, which means that they can actually lever up quite a bit. So right now,
what exactly does this do for the markets if that happens?
So this allows banks to hold more treasuries on their balance sheet.
And that gets rates to come down. I mean, yields to come down.
Exactly.
Yeah.
Exactly.
Yeah.
So Powell actually spoke about this a few weeks ago, and basically mentioned this. If you want a really good insight, just go to Google, type in Soros. Soros, I think she's the CIO right now. CIO. And basically, like last week, she did a really good breakdown. So just go to
I
that.
know this lady. Yeah, I saw this. Dawn Fitzpatrick. Yeah.
Yes. You may have to forward a little bit because some of the early parts of it were a little bit like not that relevant, but I think there's one part that was highly relevant.
What's the main word? I'll just Command F it real quick. That she talked about.
Just type in New York Economic Club, I think.
No, I have the video, but what's the word she said in her?
Oh, SLR. She brought up the SLR thing.
And SLR stands for what again? Strategic something?
I think it's like the secured lending ratio.
Yeah, because usually you can just type into the transcript and find where she talked about that. Let me see. Yeah, I saw this.
Liquidity ratio or supplementary leverage ratio.
Okay, let's see from here. Yeah, this lady, she's not in the Trump administration right now, though, right?
No.
Put money to work in this market.
Yeah, so we're technically an endowment, but we use the best of the endowment model and the hedge fund model, so we can react very quickly. And I think we're very good. I would argue probably one of the best in the world at connecting the dots across asset classes. And from our perspective right now, the volatility is great. I think market structure is still challenged in that liquidity at moments in time when there's a lot of volatility is challenging. So you can see a great trade, but sometimes buying as much of it as you want is easier said than done.
Do you have a favorite trade right now?
Yeah, that's a good question. So we are tactically, at the end of last year, we bought call spreads on Hong Kong equity indexes.
This is the part where I think she's talking about what you were saying.
No. It was actually earlier than that. I think the 2 minute mark.
This is it.
So go to the 2 minute mark.
I would take the other side of that bet because, again, I think ultimately they will bear more pain than I think market participants originally thought, but there will be a limit. And I think they will make deals.
There's a view in the market that Scott's preoccupation with keeping the 10-year yield low.
This is the part. This is where she talks about it.
Yep.
Foreshadows a coming change in bank regulation. You know, if the administration wants to juice demand for treasuries, it could exempt treasuries from the supplementary leverage ratio, one of the capital penalties that the big U.S. banks have to pay. Do you think they'll go there?
So I definitively think that is going to happen. So when you look
Wow. So another person who's backing up this thesis that Trump wants to get the 10-year to come down.
at kind of the net issuance of treasuries post-COVID, it's almost all been bought by the levered hedge fund community. And I don't think, first of all, that's not a sustainable kind of marginal buyer. And it also probably isn't good for market structure and market stability. And when you look at what came out of Congress
I'm gonna pause that for a second.
last week, you know,
Okay, so what she's essentially talking about is, with all this new federal, basically that paper that's out there, if you allow hedge funds and PE funds to basically be the main guys who buy it, they are not reliable. Why? Because they buy and sell these things, right? So it's always going to keep moving up and down, and it's not going to give you like any sort of market stability. That's why you saw basically the 10-year go from 4.8 now to like 4.1 last week, and then it trended up to almost 4.28 to 4.3 again, all within like 1 week. That's really bad for trying to plan things out, right? So let's play the rest of it now.
NASDAQ, by the way, guys, just went down 4%.
deficit is not going lower in any material way. So what I think they're going to do is they will change bank regulation and the supplemental leverage ratio, allowing banks to buy treasuries in ways that won't be regulatorily punitive. And the next step is they will try to take some leverage out of kind of that basis trade in the levered market. And again, I think this is where Scott understands the moving parts in ways that I think will ultimately be really helpful.
You've given us a couple of clues about how you might be trading.
Yeah, I think your point is proved, Kris. I think so. So if banks can buy up more treasuries, that would obviously be net good. But
well, it would stabilize the treasury market a little bit, so the yields wouldn't fluctuate nearly as much. Not to mention yields would actually move down significantly. There's a lot of money sitting on the sidelines right now in shorter term paper that basically can be moved to longer term paper, or if the Fed were to signal that, hey, we're going to be cutting rates sooner rather than later. So right now, the data that you have to follow is just how close are we to seeing that happen?
okay, so here's the question: like, do you what gets Jay Powell to cut if that's what Trump wants?
Well, what's his job? He always says that he has two jobs: full unemployment, right, and market stability, price stability, right? So if he sees prices going down and growth slowing down, that is a reason to cut. If unemployment is starting to rise, that is a reason to cut.
But non-farm payrolls were good.
Yeah, but that's backward looking, brother.
So you think the labor market will get significantly weaker in the coming months, is your point?
Correct.
But what if it doesn't? Because then I think Trump's theory is screwed. If he doesn't get the wrong data, right? Like, why would Jay Powell cut?
Well, here's the thing. Look at the stock market right now. It's going down, right? If this does not breed fear into the markets, all this tariff talk doesn't breed fear into the markets, I don't know what will. I mean, this is why you also saw the savings rate climb, right? There is generally a lot more fear in the market. So businesses, when there's fear in the markets, what do? They don't invest in more employees. They don't invest in, additional capital. All that money, all that liquidity gets frozen. And when that freezes, growth slows down. And once growth slows down, you got bigger things. Every single policy that the Trump administration has basically put up till now has been to control inflation, right? You look at immigration, right? Basically, there's little to no immigration coming into this country right now since the borders have been closed. Why? Because if you think about it, our population growth rate relies on a lot of immigration. If you don't let immigrants in, your population stagnates, right? You're basically not going to grow as much. But it also means the government's not going to be there to spend all this additional liquidity into the economy to support these new arrivals, right?
Yeah, because a lot of immigrants get healthcare, et cetera, right? So
so a lot of people are like, well, the government doesn't give immigrants anything. Like, yeah, but they basically support a whole litany of NGOs that basically provide all these services. All that money eventually makes its way into the economy. So by taking that away, you're taking away the liquidity punch bowl, So eventually the data will make its way into the numbers, but it's going to take some time for it
So then here's the argument for the elephant in the room is everyone saying, okay, so if Trump's tanking the market to get rates to come down, why shouldn't we sell stocks? What would be your response to that?
Because you never know when the reversal is, right? That's the hardest thing to do, which is try to pick an actual bottom. So I think someone said a while ago, like if you miss like 3 or 4 of the really good days in the market, you basically are underperform underperform. Not to mention you deal with all the tax liabilities of being out of it and getting back in and all that nonsense. So, this is where if you have some money on the side, that's where you want to just try to pick up things that long term you want to be in.
When do you think it gets bad enough? Like, do we need 10% down on the S&P for J Powell to realize that we're having a real growth scare, or is there a level in your head that you think it happens, or not?
I'm watching the senators and the House basically and their communications to Trump. The reason for it is simple. Without them, he is basically screwed, right? So he needs policy wins in order to succeed. Now, how do you get policy wins? Well, you need to keep a control of all the senators and the Republicans in the House, because you have a very thin majority. So when they start to complain about something, then it ends up becoming more policy resistance. So right now, Trump is basically trying to do a continuing resolution to September, right? So in order for Trump to get that, he needs all the Republicans, like 100% of the Republicans in the House, to vote for the CR. The challenge is if there's like House members saying, look, I'm getting calls from my constituents who are absolutely pissed off at the current economic situation. I'm not going to vote for your CR unless you freaking, moderate your tone on tariffs or this. He's going to eventually have no choice. Otherwise, he risks basically shutting down the government. And if he shuts down the government, then you really got to worry about recession, because you got all sorts of weakening happening, and if you start breaking things, it's going to be much harder to recover. So this is where you kind of just have to look at the public outcry also, and how that'll impact midterm elections. I think from a timing perspective, I spoke to the other Amit. 6 months would be the absolute limit on how much you can deal with the downside move.
That's what I thought. That's what I thought as well.
After 6 months, I think it'll be a challenge, because then what tends to happen is when the markets fall, the markets tend to recover, but it takes a really long time for them to recover, right? So the whole saying is, when markets go down, it's like an elevator. When markets go up, it's like an escalator. And if basically Trump has to now force the market to go up for the next 6 months to a year, by that time the midterms will come and basically he's done for, So I think right now there's a lot of people that are pissed off at some of his policies, people who know somebody or who personally used to work in the federal government that may have voted for him, and basically they're losing their jobs, right? If you worked for a nonprofit, that's another segment that lost their jobs. If you worked as a contractor, you were losing your jobs. What he's doing right now is absolutely, in my opinion, necessary to get the budget under control and basically spending under control. But at the same time, I know that politically, because it's not a strong mandate, as basically he's saying, he's more likely to capitulate than not.
Yeah, and I think, by the way, guys, for those wondering who the other Amit is, me and Kris have a mutual friend named Amit as well. So that's who we're talking about. But the capitulation thesis, I think, is correct, is every time he gets ready to put down the tariffs, we get an extension. And it almost feels, and I wonder what your perspective on this is, Kris, that he's hyping up the tariff to create the volatility. But then when it's time to implement them and actually, get the effects of them, he just delays it because he doesn't actually want the tariffs. Do you kind of think that's correct?
I think the goal is to use the tariffs to get policy policies change. I don't necessarily. I think if let's the question that I would have here is, if inflation was low, would he still do tariffs? And if you look at 2018, he would absolutely do tariffs, but he would probably do it towards just China, right? And I think ultimately that's what we'll end up with: China paying 20% in tariffs, Mexico and Canada getting zeroed out again. You know, I think that's where we end up. Like, the other thing is, long term, I feel like the Americans' main goal is to weaken China, and every policy decision I see is also geared towards, kneecapping them as much as possible, whether that be economically or politically. It's all about China. So if you look at the decisions that are being made, it's basically towards decoupling China from us. Hopefully it ends up working out, and that's something that we just have to deal with.
Okay, so I guess last question. This is an interesting one. And Kris, a lot of people appreciate your thoughts and opinions today, so thank you for taking the time. Do you think investors should have seen this coming when Trump won?
No one could have seen this coming. I'll be honest.
Why?
I think when he first came into power, people leaned on his, leaned on his past actions regarding the stock market and using that as a barometer. So people looked at that and said, well, you know what, if he did it in the past, he's more likely to do it now. And I think there's still some truth to it, but I think, just as what's her name from Soros Management said, there's a level of pain tolerance this time that he has that's a little bit more than what it was in the past. Right? So I think eventually we will see him capitulate, but it's not the same as it was before, So I think that's the only difference. So I think right now, someone said, "Oh, he's not." Well, he said, I'm not watching the stock market." Bullshit. Whenever someone says that, bro, that means that they're watching it even more than everyone else. So,
but he's sacrificing the market for these rates. That's the conclusion he's come to.
I mean, that's unfortunately how you get confidence down and you get growth to slow down, because otherwise you end up in a really bad scenario. I think the biggest challenge for us is making sure that we don't end up in stagflation.
Yeah.
Right.
Yeah.
Where you have persistent inflation while at the same time low growth. That's like the ultimate bad zone. So instead, it's almost like a controlled demolition, so that this way you can rebuild things,
Yeah. All right, Kris, thank you so much. Appreciate it. I will put your X in the chat, but X is not working right now for everybody. So hopefully that starts working in a little bit.
Yeah. I mean, this is the time where you basically just go to sleep, man. Don't look at the market. Like, the more you look at the market, the more you look at your portfolio, the worse you'll feel, the more likely it is that you'll end up being and don't be in short-term stuff. Like, if you're in short-term call options or anything, you're gonna get effed, because you don't know how long this is gonna last. I know some people, and dude, this is exactly why I am so anti wheeling. Okay.
Yeah, selling puts. In a bear market, you end up getting assigned on those puts.
Yeah, and the problem is now you end up, some people go on the higher risk side and they start selling puts on margin.
Yeah,
and then it ends up going even into a worse situation, because now you're selling things just to cover your margin, and it just keeps getting worse and worse and worse. This is why when we were having that debate last time with TJ, it was like, well, if you wanted to buy this stock at this price, you should just do it. You sell some covered, sell some cash secured puts. And that's where I have to remind people, just because you think this company is good doesn't mean that it's detached from the general market. And if the general market craps, then now you're going to get a whole bunch of these things assigned to you,
Yeah, but the same thing also goes for leaps, though, right? Like, your leaps are getting crushed. I mean, anyone's leaps can get crushed as much as their puts. It's just like in a red market, any way you play it, unless you literally bought puts, I mean, you're getting hit.
the best thing about leaps is that you have so much time on your hands for that reversal. If you don't have time on your hands, that's the main enemy.
Agreed.
You know?
Agreed.
So if you really like a company and right now you think it's very undervalued, some leap plays are not a bad idea. The only thing is volatility is really high, so you'd want to kind of wait a little bit for volatility to come down.
And you have to assume if you're buying a 2027 contract that the markets do get through this till 2027, right? Like you have to have the confidence that this is resolved by the end of 2025. 2026 is a good year. If you don't have that confidence, then you probably shouldn't get into a 2-year.
I mean, for me, it makes obvious sense to why to buy a leap, because the market is, or at least the administration is going to make sure that they're going to be very supportive of the stock market, because they don't want to be dealing with this during a midterm. Imagine right now, just imagine for 2 seconds. We had a really bad year this year. The markets are down 20% by the end of 2025, right?
Yeah.
And now they're slowly starting to recover. Well, guess what? Now the Democrats, bro, they got nothing but ammunition to take you out on. Crazy amounts of ammunition. Look at Trump. He screwed over the stock market. He got
but what if Trump gets inflation to come down aggressively and regular people can finance a car at 3% again versus 7%? Well, you and me are screwed, and everyone in the chat is screwed because we're investors. But the average Joe gets a lower mortgage rate. He's feeling really good about Trump, right?
Dude, the average Joe also has a 401k.
But Chris, most people are not like staring at their 401k, right?
No, dude, you'd be surprised at how many people actually look at their retirements. People have pensions. Okay, even sovereign wealth funds have a pretty significant interest in making sure the market is not like going down like crazy, and also companies. So a lot of things are very fluid. So I would say if Trump doesn't want to get creamed during the midterms, he's got to start basically getting things to be better by the second half of this year. And I think that is what I'm relying on, which is self-interest, in order to make sure that the economy and the stock market are relatively recovered by then, so that this way 2026 can be a much easier and smoother process of recovery and a growth stage, so that this way he can come in and say, look, the Biden administration messed you guys up. He left you with high inflation, all these debt problems. I came in, I had to deal with things, but I helped you fix them, And those are the talking points that he needs in order to maintain the House and the Senate in 2027. So I'm telling you, if he loses either the House or the Senate or both, he is going to have 2 years worth of nothing but pain, with these guys basically trying to impeach him over everything. And then there might even come after freaking Elon Musk, brother.
I mean, I think they're already coming after Elon, right?
No, but with the power of with the power of Congress investigating everything, bro.
Oh, if they screw the economy so bad, you think they're going to come after Doge and all that stuff? Basically.
Bro, they are going to go after a lot of people, and basically it's going to be bad. It's going to be really bad.
In general, 30% of GDP spend is government spend. Do you personally think that needs to come down?
Absolutely. I think government, we tend to spend a lot of money on a lot of dumb shit. And the whole thing is, some of it I understand, like just it's a liquidity. It's liquidity that needs to make its way into the market. But, when you think of something like taxes and you're taxing, and I know this is going to sound bad, but if you overtax the job creators and the people who actually have real growth, and you take that money and just redistribute it to people who don't provide any real value other than, hey, I'm a human and I get to vote, then that's not good, because that means that there's no progress, right? You constantly want to reinvest in the country, and you want to reinvest in the people who are going to make the country better and better and better and make it bigger, right? So you want to invest in entrepreneurs. You want to invest in students. You want to invest in people with great ideas. You want to invest in, in research institutions. But you don't want to invest in basically, like right now, like how much money did the federal government spend in New York City? Not just the federal government, but people housing migrants in shelters that were owned by like in a hotel building. I mean, dude, that's
It was
very
it was a
inefficient.
couple hundred million, I think, 300 something million.
$300 million. That's a freaking crazy amount of money for what? You know, it makes no sense to have that. Imagine that 300 million went to scholarship programs for gifted kids, you know, who wanted to pursue a degree in STEM fields, or give that money to basically SBA to do loans for small businesses.
But if the government isn't spending for our GDP, do you think we can make it up in the private sector?
Only if you support the private sector and unleash the private sector to do what it does. And one of them is take risks. Yeah. If you lock away the private sector, you overregulate the private sector. There's no incentive to keep going. So that's the thing. Like that's why you have this like that curve. I forgot what it was called, but basically, the more you tax people, the less incentive you're giving them to develop new things. Look at the Europeans. The Europeans have some of the worst. I mean, I don't want to say the worst, but they have some of the highest taxes, right? But that also means that the amount of people doing actual innovation, they're not rewarded. And if they're not rewarded, then people don't do it. That's why they're much weaker than we are when it comes to growth.
Yeah.
Overregulation is a really big problem in the European by the Europeans, and they're paying the consequences of it.
Yeah.
So I honestly believe the Trump administration is doing the right thing for long-term growth, but the short term, we're gonna feel the pain, and we're just gonna have to live with it. And I think we'll get through it.
Is there anything you're buying right now or holding on in cash?
I have to do a giant Patreon post about this, but I'll tell everyone here. Look at Venture Global, VG, baby. I am so heavy in Venture Global right now, and I'm buying more by the day. Literally, all I've been doing for the last 2 weeks is searching natural gas vessels, tracking natural gas vessels on Vessel Finder, looking at how many cargoes are flowing through their new projects, what the current Henry Hub price / the TTF prices are for the spread price in natural gas, what the storage levels are in.
We'll have you come on another day to give the thesis, because I know it's a long one, so you can explain it another day.
Yeah.
But yeah, so you're going to natural gas as like a
Well, this one specifically, this one is the one that I really, 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 really like. If that isn't enough reallys, I could throw a few more on there for you.
Do you think TLT is the safe play right now?
Yeah, but a lot of the juice has been squeezed, so there's not much juice left. I don't think the 10-year can go beyond probably 3.5. I think more now. You kind of if we get to 3.5 on the 10-year, then that means that the Fed is already really too late in the cutting cycle, and that they're going to start cutting a lot. In which case, now the short end should start to materially go down. That means that we'll see an accelerated pace, but I don't think that the 10-year is going to go down too much. Unless we're in recession, then the freaking 10-year could be at 2%, which means that the price of TLT could be at 105, 110, something like that. So in my opinion, there's not enough juice on it. The good thing is you're still getting a pretty good yield, and it pays monthly right now.
A last question, LMT. Why do you think Lockheed Martin's up?
War, baby. War. That's it.
Yeah, that's probably why.
When there's war, it's good for everyone, right? So, it's good for defense contractors. Yeah. I mean, the Europeans are stepping up, saying they're going to buy way more military hardware. Yeah, that's pretty much it.
All right, Kris. Thank you. Appreciate your thoughts. Maybe we'll talk to you later.
Everyone on the market right now, just chill, guys. Everything's okay. All right. Everything's going to be all right. Every time these moments come, we dealt with this in August. Y'all remember August of 2024? Everyone was crying, oh my God, Japan carry trade. Look, everything is going to melt down. And after a month, everyone's like, oh my God, everything's great again. You know, we saw that happen. What are some of the other times where we saw massive drawdowns the last few
September,
years?
we were down 4%. September 2024, we had a rebound. February 2024, we had a rebound. August, obviously.
Yeah.
October 2023. You know, like, I mean, if it's a good company, you tend to rebound.
Exactly, man. Just chill. This is not that. I mean, it sucks to see it in your portfolios. To be honest, it really sucks. That's why I don't open my portfolio. That's my strategy. when there's red days, you just don't look. Okay, I don't like Kris. How much are you down right now? I have no idea. You know, if I don't see it, I'm not really down, am I? I only look at my portfolio when days are growing good and it's green. So I'm like, oh, look, I'm doing really well. You know.
Whatever you got to do to protect your mental health, right?
You have to keep looking at it because you're one of those guys, but no, not me, man. Not me. I'm like Jesse Dow on crack, bro. Jesse don't mention how much he's down right now. He's chilling, bro.
No, I mean, even Derek looked at his portfolio for the first time on Saturday because I called him. I was like, how much are you down? He's like, I don't know. I was like, why don't you go check? He was like, no, I'm not going to ruin my weekend. 5 hours later, he calls me.
It's all
He calls me 5 hours later. He's like, my weekend is ruined. I'm like, well,
yeah, it's all a mental game, bro. It's all a mental game. As long as you're in it for the long haul, don't look at the portfolio on red days. Okay, that's it.
That's the trick.
And have enough money on the side so you can eat for the next couple of months, just in case. You know, me and the wife, I was telling her, I was like, because you know, we have this money sat on the side to buy a house, right? And I'm like, honey, you sure you want to buy a house this year? You know what? Maybe we should just, you know, take this money and park it in some. And she's like, no, hell no, we're not doing that. All right. And I was like, okay. So I've got all the houses that we've been going to for the last week, I've hated. Why? Because every time I look at it, I'm like, fuck that. I'm not paying no fucking $5,000, $6,000 on a mortgage. But 2 weeks ago, I was like, man, we could afford this. It's not a problem. My wife's like, oh shit, you changed, huh? And I was like, well, it's not me, man.
I didn't change. It was Trump's fault.
It was Trump's fault. Yeah, exactly.
All right, Kris. Appreciate you, man. Thank you.
Take care. Have a good one.
Care.
Bye.
All right, guys. That is it for me. That's 3 hours into the stream. Hopefully, we got some good feedback by Kris on a day like this. We're still pretty red. I mean, nothing has changed since Kris came on about 40 minutes ago. S&P still down 2%. Grabs getting hit down 10%. Hoodie, little recovery. It was down 15. Now it's down 12, but still down. NVIDIA down another 5. AMD down another 2. I am going to be very curious to see how we close during the day. I'll be back on the market close at 3:45. We'll have Oracle earnings. And I'm really curious tomorrow with the JOLTS data and then CPI on Wednesday, how this market ends up turning out. Is Monday the worst of it? Or is Tesla at 239 about to go to 220? Like, how bad is this going to get? What is Trump going to say? He has some conference today with a bunch of tech companies. He has those Saudi Arabia peace talks with Ukraine coming up soon. I mean, a lot of headlines this week that are either going to take the market further up or down. But we're getting some decent pain on a Monday, and so we'll see if Monday is the worst of it, or we continue to get hit. All right, cool. That's it for me. Let's do word of the day, and then I'll be back on the market close, and we'll see how this goes from here. This is a random word of the day, but here it is. The word is fress. There's no way I'm saying that word wrong, bro.
Fress.
Okay, thank God. To eat or snack, especially in large quantities. No one talks when the food is good. We just stop fressing on all the mangoes, leave some for the rest of us. Well, no one's fressing on these stocks. No one's eating them up right now. So I guess we're going to have to wait until people start nibbling a little bit more at these stocks. All right, I'll be back 3:45. We got Oracle earnings, and we will keep going from there, and we'll see how this market turns out on the second week of trading for March towards the end of the day. All right, thank you, everybody. I'll see you guys in a few hours. Bye, everyone.